So let's get started with our first question. The first question is, under the CDB Tarun Plus scheme, the maximum amount of assistance offered to an eligible borrower is option A 5 lakh, option B 10 lakh, option C 15 lakh, option D 20 lakh. So first of all, let's see option A. 5 lakh sound small, right? That's because these fall under the Sisu or Kisor category of the Pradhan Mantri Mudra Yojana. In short, we call it PMMY. Tarun Plus is for bigger, more established business. Now option number B 10 lakh. 10 lakh is the actual upper limit for the normal Tarun category under PMMY. So if it is normal Tarun category, then 10 lakh is the actual upper limit. Think of it as the ceiling. This is where regular Tarun stop. But Tarun Plus is like adding another floor to your building. It goes beyond 10 lakh. What about 15 lakh? Yes, this is the star of the show. Tarun Plus take the normal Tarun limit of 10 lakh and extend it up to 15 lakh. But only for existing well-performing borrower. So if you are already running your business successfully and need more fund for expansion, so this Tarun Plus scheme give you that extra boost. Imagine you have a shop doing well, but you want to open another branch. So Tarun Plus can make it happen. What about option D 20 lakh? No, that is too high for this scheme. Plus Tarun Plus cap it at 15 lakh, 20 lakh is out of range. So let's quickly recap. Remember, Tarun Plus is extra fund for good track record borrower in Tarun category. Normal Tarun limit is how much 5 to 10 lakh. And Tarun Plus is over 15 lakh, up 10 lakh to 15 lakh. And it is only given for expansion and additional working capital, not for a brand new borrower. Now you tell me, if you already had 10 lakh Tarun loan and your business was doing great, what would you expand with extra 5 lakh from Tarun Plus? Comment below, I am curious to know. So if you already have 10 lakh Tarun loan and your business was doing great, what would you expand with extra 5 lakh from Tarun Plus? Friends, if you are looking for any kinds of study material for MSME examination in the form of theory PDF, MCQs PDF, previous year question, right, or short notes, capsule content, so you can enroll in our MSME course. In the description section of the video you can see the link, and for more detail you can WhatsApp me on this number shown on the screen. We have a complete exhaustive course available from which many students have passed in the previous examination. You can also take help of those courses. Now let's continue our discussion to the next question. That is, this is one MCQ where many people get tricked because all options look tempting. So let's break them down one by one and see why one is correct. The question is the credit linked subsidy capital subsidy scheme. In short, we call it CLCSS. CLCSS, yeah, right. It provides which of the following benefits and conditions to manufacturing, micro and small enterprise? Option A says 20% upfront capital subsidy on loan up to 50 lakh for technology upgradation. Option B, 15% upfront capital subsidy on institutional finance up to 1 crore for approved technology. Option C, 15% interest subsidy on loan up to 1 crore for technology upgradation in all sector. Option D, 10% upfront capital subsidy on any amount of loan for all type of enterprise. So if we see the option A, 20% sound attractive. 20% upfront capital subsidy on loan up to 50 lakh. So 20% sound attractive, right? But CLCSS does not give 20%. It gives 15%. Also the loan limit is here up to 1 crore, not 50 lakh. So this option is mixing up two wrong fact. So that's why it is wrong. What about option B? 15% upfront capital subsidy on institutional finance up to 1 crore for approved technology. Yes, this is the right one. Under CLCSS, if you are manufacturing MSc and you want to upgrade your technology, like replacing old machine with a more efficient one, so you can get 15% capital subsidy directly on your loan amount. For example, suppose you take 50 lakh loan for the approved technology. So you get, what is the 15% of 50 lakh? 7.5 lakh. So you get 7.5 lakh subsidy upfront. And remember, the loan can be up to 1 crore, but it must be from an approved institutional source and for technology listed under the scheme, right? So these are the limit: 15% upfront capital subsidy up to 1 crore for approved technology. What about option C? 15% interest subsidy on loan up to 1 crore for technology upgradation in all sector. Be careful here. Remember, CLCS is a capital subsidy scheme, not interest subsidy scheme. See, if you are not careful, you could take option C correct also, but it is wrong because here interest subsidy is written. Remember, CLCSS is the capital subsidy scheme. Second point is that there is a loan limit of 1 crore, right? So it is, and also remember, it is not for all sector. It is only for a specified subsector and approved technology. So wrong on both counts. What about option D? For all type of enterprise. So this is way off, right? First of all, it is not 10%, it is 15%. Second, there is a limit of 1 crore. And third, it is not for all type of enterprise. Only manufacturing MSE are eligible. So let me summarize the fact. The scheme name is CLCSS. It helps manufacturing MSE to upgrade technology. 15% upfront capital subsidy on institutional loan up to 1 crore. Only for approved technology in a specific subsector. Started from 29 September 2005. And capital subsidy is not interest subsidy. Both are different things. So if you owned a small manufacturing unit and you got this subsidy, which machine or technology would you upgrade first? Please type in the comment section. Now friends, let's look at one more question regarding the industry corridor. Industry corridor easy to say, but exam question on them can be tricky. So we will break down this MCQ into simple bits so that you never forget it again. And yes, we check every option, not just the correct one. Question is, which of the following statement about Indian industrial correct is correct? Indian industrial corridor is correct. Option A, only 2 industrial corridors exist in India, both located in the northeastern state. Option B, which says that industrial corridor aim to boost manufacturing by developing smart cities and improving connectivities across multiple states. Option C, all industrial corridors are funded exclusively by private investors and limited to coastal region. Option D, industrial corridors have no role in urbanization or next generation infrastructure. So which option do you think is correct? So let's start with option number A. Option number A is outdated and wrong. India already has planned for over 11 industrial corridors, not just 2, and they are spread across the country, north, south, east and west. So it's like saying that India has only 2 cricket stadiums. Clearly not true. What about option B? Option B is spot on. This is exactly what industrial corridors are all about. They connect multiple states with high-speed transport, modern infrastructure, and sometimes even brand new smart cities. For example, Delhi-Mumbai Industrial Corridor not only improve connectivity but also create entire new industrial zone. It is like building a manufacturing superhighway with cities along the way. What about option C? No. Funding come from multiple sources. Government of India, international partner like Japan, some private investors are there, and they are not just the coast. Many are inland also. For example, Amritsar Kolkata Industrial Corridor, they passes through landlocked state. And if you look at the option number D, it is completely wrong. Urbanization and infrastructure are actually at the heart of this corridor. Many projects even include greenfield smart cities, expressway, dedicated freight corridor. Exactly what next generation infrastructure means. So let's quickly recapitulate what we have covered. India is building 11 plus industrial corridor to boost manufacturing and to boost export. They connect multiple states, both inland and coastal. Smart cities, better connectivity, modern infrastructure, they are the part of the plan. They are funded by public, private and international partners. Next question is, which of the following correctly describe the classification of special mention account subcategories for bank loan? Right. Friend, SMA category are one of those topics where examiner love to confuse you. Number, days, limits, it can get messy. Let's decode it step by step so that you will never mix them up again. So option A says SMA 0 overdue 1 to 30 days, SMA 1 overdue 31 to 60 days, SMA 2 overdue 61 to 90 days, and in revolving credit, SMA 1 access balance for 31 to 60 days and SMA 2 access for 61 to 90 days. Option B, SMA 0 overdue for 31 to 60 days. Similarly, you can read the option. Similarly, C, SMA 1 overdue for 1 to 30 days, 2 for 31 to 60 days. SMA 1 overdue for 1 to 30 days, SMA 2 overdue for 31 to 60 days, SMA 0 overdue for 61 to 90 days. And option D says, subcategories are not applied for overdue payment or credit facility. So let's see which option is correct. First of all, option A, yes, this is a spot on. Let's break it down. SMA 0 overdue between 1 to 30 days, SMA 1 overdue 31 to 60 days, SMA 2 overdue 61 to 90 days. And yes, if it is revolving credit like a cash credit or overdraft account, the rules are slightly different. It's about how long your outstanding balance stay over the sanction limit, right? So in that case, SMA 1 access is 31 to 60 days. So friends, in the case of revolving credit, like cash credit, what happened? The rules is different. It's all about how long your outstanding balance stay above the sanction limit. So if it is access for 31 to 60 days, then SMA 1. If it is access for 61 to 90 days, then it is SMA 2. You can think of it like, warning light on a dashboard. SMA 0 is yellow, SMA 1 is orange, SMA 2 is red, If you don't fix it by SMA2, you are heading for NPA. What about option B? Option B, this is wrong because SMA framework only goes up to 90 days. After 90 days, the account become NPA. So this option extends the timeline beyond what is the rule. What about option C? It is clearly jumbled. SMA 0 always come first. It is the earliest warning stage, not the last. This is like mixing up class 1, 2 and 3 in a school and making class 1 the final year. It just does not work. What about option D? It is completely wrong. Option D is completely wrong because SMA category are specifically for tracking overdue amount and credit irregularities so that bank can take early action before the account turns into NPA. So let's quickly recapitulate what we have covered so far. So I have told you that SMA 0 means overdue for 1 to 30 days, SMA 1 means overdue for 31 to 60 days, SMA 2 means overdue for 61 to 90 days, and revolving credit means SMA 1 excess means sanction limit means outstanding amount exceed the sanction limit for 31 to 60 days, then it is SMA 1 for revolving credit, and if the outstanding amount exceed the sanction limit for 61 to 90 days, then it is called SMA 2. After 90 day overdue, NPA classification kicks in. Now let's see one more question based on SMA 1. This was a case study type question which was asked. This is a very good question. So the question is like this, this is the basically this is a classic exam trick, SMA classification case study. They give you the dates and you have to quick day counting, right? Quickly do the day counting. Let's solve it step by step so that you never fall into the trap. A term loan was sanctioned in January, and the first installment became due in February but was not paid. On 31st March, the overdue amount is still unpaid. So friends, term loan was sanctioned in the month of January. The first installment became due in February but was not paid. On 31st March, the overdue amount is still unpaid. Which SMA category will it fall under? Option is SMA 0, overdue 1 to 30 days. So this is the first warning level. SMA 0 means your installment is overdue for up to 30 days. SMA 0 means your installment is overdue for up to 30 days. But here by 31st March the installment has been overdue for 31 days. Just 1 day more, but enough to push it out of the SMA 0. It's like your train ticket expiring yesterday. You can't use it today even if it's just 1 day late. So option A is wrong. What about option B? Exactly. From 1st March, the loan become overdue from 1st March, right? You can see it became due in February but was not paid. On 31st March, the overdue amount is still unpaid. So from 1st March, when the loan become overdue to 31st March, it is 31 days, right? RBI say 31 to 60 day overdue, it become SMA 1. So this is basically the second warning light for the bank to take action. Friends, option B is the perfect answer because from 1st March when the loan become overdue to 31st March is 31 day. RBI say 31 to 60 day overdue, it comes under SMA 1. This is basically the second warning light for the bank to take action before the account worsen. Let's look at the option number C, which is SMA 2 overdue 61 to 90 days. This would mean the borrower has skipped payment for at least 2 months straight, 61 days or more. In our case, we are only at 31 day overdue, so SMA 2 is too far ahead. Option D is NPA. NPA happens when only when an installment is unpaid for more than 90 days. That is 3 full months of non-payment. Here it is just 1 month. So we are far away from NPA territory. So let's recapitulate what we have covered. So remember, SMA 0 means overdue for 1 to 30 days. SMA 1 means overdue for 31 to 60 days, which is our case here. SMA 2 is overdue for 61 to 90 days. NPM is overdue for more than 90 days. Having one extra day can change the SMA category, right? So now let's test your speed. Suppose the overdue started on 1st April and today is 5th June. So which SMA category would it be? Please type your answer in the comment. Let's check your understanding. Now friends, let's look at the second question. So I again repeat my question. If the overdue started on 1st April and today is 5th June, which SMA category would it be? Please type your answer in the comment section and I will provide you the answer in the comment section. Now friends, let's look at the next question. When we talk about a business being sick, we are not just talking about cough or fever. It is about the financial health of a company. RBI has a very specific definition for when a micro and small enterprise MSE is called sick. Let's break it down option by option. Question is, as per RBI guideline for rehabilitation of MSE unit, Which of the following situation qualify an MSE to be classified as a sick? So options are option A, any borrower account remaining NPA for 3 months or more. Option B, erosion in net worth due to accumulated loss is 50% or more of its net worth during the previous accounting year. Option C, either A or B above. Option D, both A and B should be met simultaneously. Now friends, let's look at option number A. Option number A is correct. If the business has taken a loan and that loan account remain in NPA status for 3 months or more, the unit is considered to be sick. Imagine a shop that has not been able to pay its EMI for 3 months after already being tagged NPA. That is a strong signal that the business is struggling seriously. Now let's look at option number B. This is also correct. Erosion in the net worth. Net worth basically means the value of what the business owned minus what it owes. If losses eat away half or more of that value in just 1 year, it is like a battery losing half its charge overnight. So the business is in serious trouble. So option B is also correct. What about option C? Option C is the correct answer because just one of these conditions is enough. Either your account has been NPA for 3 months or your net worth has eroded by 50% or more. Both situations qualify as sick. You don't need both to happen together. What about option D? Both A and B should meet simultaneously? No, this is wrong because RBI made the rule easier to identify sick unit early. Waiting for both conditions to happen would delay the rehabilitation support and which would kill the business later faster. So to just summarize what we have covered here, so I told you that unit is called sick if it's either loan account remain NPA for more than 3 months or net worth erosion is larger than 50% in the previous year. No need for both conditions together. Early identification help bank take corrective action together. Now here is a quick one for you. Suppose an MSE loan account become NPA on 1st January and stayed that way till April 5 and their net worth also dropped by 40% last year. Will it be classified as sick? Comment your answer and let's see who is quick with the RBI rule. My question is, if an MSE loan account become NPA on 1st January and stayed that way till 5 April and their net worth also dropped by 40% last year, will that classify as sick unit or not? Now have a look at the next one. Friends, before an MSE become a sick, RBI has a smart early warning system that is called hand holding stage. This is when the bank steps in to help. Let's see when this stage kicks in option by option. Question is, MSE will be treated as having reached the hand holding stage where bank start early intervention if which of the following event occur. Option A, delay in commencement of commercial production by more than 6 months beyond promoter control. Option B, losses for 2 consecutive years or cash loss for 1 year beyond accepted time frame. Option C, capacity utilization on annual sale less than 50% of the projected level. Option D, any of the above. So friends, option A if we talk about, yes, it is correct. Imagine that you are setting up a factory and plan to start production in January, but due to delays in government approval or delays in equipment delivery, things you can't control, it get pushed beyond 6 months. That is a sign to the bank that your project needs support now before it spirals. So option A is correct. What about option B? This is also correct. If a business keep making loss for 2 years in a row or even has a big cash loss in 1 year that is beyond normal limit, it is like a fever that won't go away. The bank should step in early to diagnose and treat the problem. What about option C? Option C is correct again. Suppose you plan to produce 1000 units in a month, but you are only making 400. Or suppose you expected sales of 10 lakh but barely reach 4 lakh. So option number B says that option number B is correct. Option number C, capacity utilization or annual sale less than 50% of the projected level. So suppose you plan to produce 1000 units in a month, but you are only making 400, or you expected sales of rupees 10 lakh but barely reach rupees 4 lakh. That is less than half of your target. Clearly something is wrong and early intervention is needed. What about option D, any of the above? Yes, this is the right answer because any one of these three trigger is enough for bank to say, okay, this unit need hand handling now. No need for all three to happen together. So the option number D is the correct answer. So let's quickly recap what we have covered. So what is the meaning of hand holding stage? Hand holding stage means bank early support system for micro and small enterprise. So what are the triggers? Trigger includes the first trigger is if the delay in production start is larger than 6 months. which is beyond the promoter control. Right, this is the first trigger. Second trigger is losses 2 years in a row or cash loss in 1 year beyond limit. Third trigger is capacity use or sale less than 50% of the projection. So if any one of these is enough to start the intervention. Let me ask you a question. Suppose a unit start production late by 8 months, but sales are 60% of the projection. Will it reach the handholding stage? Drop your answer in the comment. I told you now that before an MSE become a sick, RBI has a smart warning system that is called handholding stage. This is where bank steps in to help. When hit trigger, when the delay in production is larger than 6 months. So I am telling you that unit start production late by 8 months. Yes, this is a trigger, right? And second, I am telling you that loss 2 years in a row or cash loss in a 1 year beyond limit. Now friends, have a look at the next one. So the next question is the Spurti scheme is all about supporting traditional industry like handicraft, CAIIB and Khadi. But support come in 3 different forms: soft, hard and thematic intervention. So let's understand them one by one. So the question is, under the Spurti scheme, which of the following intervention are correctly matched with their example? Option number A, soft intervention, skill training, market promotion and trust building. Option number B, hard intervention, which means setting up common facility center, upgrading the production tool. Option number C, thematic intervention, which means brand promotion, e-commerce and innovative project. Option number D, all of the above. So let's start with option number A. You can think of this as the preparing the people before preparing the machine. It's all about skill training, teaching artisan how to improve quality, telling them about the market trend and building trust so that they work together. Imagine you are a weaver. You might get training in new weaving pattern, tips on better dyeing technique or how to display product in exhibition. Yes, these are called soft intervention. What about the hard intervention? Once people are trained, they need the tool, they need the space to work. So hard intervention means setting up physical facility like a common workshop, raw material bank, upgraded tool, even packaging machine. For example, giving a CAIIB making cluster modern spinning machine or building a shared workshop for carpenter. So these are the infrastructure investment under Spurti. What about option C, thematic intervention? Yes, this is the go big stage, taking the product to a larger audience and making them competitive. It's all about brand building, e-commerce, social media marketing, innovative product and connecting with the big market. For example, creating a brand name for handmade basket and selling them on Amazon or Flipkart. So this is all about the market reach and future growth. So the correct answer is all of the above. Soft, hard and thematic intervention all are the part of Spurti. So friends, basically I think this is clear now. So basically let me just summarize the fact what I told you. Soft means skill plus awareness, hard means tool plus infrastructure and thematic means brand plus marketing innovation. Now friends, have a look at one question on CGT MSE. You know that CGT MSE is a fantastic scheme that helps a small business get loan without giving collateral. But the tricky part is that percentage of guarantee cover. Percentage of guarantee cover changes based on who you are, where you are located. Let's clear that confusion today. Question is, a small business woman from an aspirational district take a 7 lakh loan under CGT MSE on 1st January 2024. What is the guarantee cover percentage after this December 2023 update? 75%, 80%, 85%, 90%. So friends, first of all, let's see 75%. See, 75% is the usual guarantee cover for many MSE with loan above 5 lakh, but it does not apply here because our borrower is a woman from an aspirational district. You know what is aspirational district? These are a special category that get extra coverage. What about option B? 80%. It is the guarantee cover for the maximum permissible period. Which of the following provision will apply? Option number A, that 30 days payment must be cleared within 30 days, otherwise interest at bank rate is payable. Option B, that payment must be cleared within 45 days, failing which the interest at 3 times the bank rate will with monthly rate is payable. Option C, payment must be cleared within 60 days, failing which simple interest at 2 times the bank rate is payable. And option D, payment must be cleared within 45 days, failing which compound interest at bank rate will be with quarterly rate is payable. So these are the four options. So let's go through each and every option. Option number A. So this look tempting, but it is wrong. Why? Because the law give maximum of how much? 45 days. And what it is saying 30 days. That's why option number A is wrong. Right. So, and also the interest is not just at the normal banking rate, right? So let me give you one example. Let's suppose that bank rate is 6%. Okay. So interest here would be, interest would not be equal to 6%. Rather, it would be 3 times 6%, which is equal to 18%, right? And that will be compounded monthly. So, month compounding, these are the rules. Please remember it, right? So I'll look at the option number B. Option number B is saying that payment must be cleared within 45 days. What do you think about this option? Let me explain. So friends, option number B, yes, this one is the correct one. Payment must be cleared within 45 days. Remember, this is the timeline. Failing which the buyer has to pay compound interest at 3 times the bank with monthly rest. So here is the word that is called monthly rest. You know the meaning of monthly rest. Monthly rest means simply interest is calculated every month and then added to the interest on both the original amount and the added interest. This makes it very costly for the buyer if they delay. Let me give you one illustration of how it works. Let's have a look at this particular side. Suppose there is a buyer, right? And this buyer, suppose 1 lakh rupees he owes. Okay. And delay beyond 45 days. So he delay beyond 45 days. So suppose the bank rate is 6%. Okay. So then 3 times. So 3 times will be how much? So 3 times will be 18%, isn't it? And with monthly compounding. Compounding is monthly. Okay. The penalty interest amount keep rising. That's why the law is strict. To protect the MSME, the law is very strict. So yes, option number B is the correct one. What about C? C says that 60 days with simple interest rate at 2 times the bank rate. This is again wrong. Maximum limit is 45 days, not 60 days. And also it is not simple interest, it is compound interest. Simple interest is lighter, but that make it strict. So option C is wrong. What about D? D says payment must be cleared within 45 days. Filling with compound interest at the bank rate with quarterly rate is applicable. See, this also is wrong. Why it is wrong? Because the law is clear. Interest is not at the bank rate. Here it is saying that interest is at the bank rate. No, it is not at the bank rate, but 3 times the bank rate and is calculated monthly, not quarterly. Right. So what we learned, let's quickly summarize the key point which we have just discussed. Right. So what we have discussed that, payment must be made. Payment must be cleared within 45 days. First point. Okay. And if delayed, then there is a section called section number 16 which applies. Okay. And buyer has to pay compound interest and monthly rate at the 3 times the banking rate. Law is designated to protect the MSME. So there is something called MSME Development Act in section 16. If the buyer make to fill payment within this period, right? So the buyer must pay compound interest with monthly rate at 3 times the rate. So that's the penalty that you have to pay. Now let's move to the second question that we have. So the second question is on your screen. So we are going to discuss an important MCQ related to back-ended interest subsidy scheme. So the question is, what is the primary feature of the BEIS? In short, we call it, back-ended interest subsidy scheme. In short, we call it BEIS, a scheme for MSME. Right. Option number A, it provides direct capital subsidy of the loan on the loan principal amount to MSME. Option B say, it offer an interest subsidy on the term loan. You can see, it offer interest subsidy on the term loan paid upfront at the time of loan sanction. Option C say, it provide 5% interest subsidy on term loan for up to 5 years, paid at the end of loan period to support technology upgradation. Option number D say, it reimburses the full interest paid by MSME on their working capital loan. So very good question. What is the primary feature? So option number A, let's begin with option number A, which says that BEIS provide a direct subsidy on the loan principal. See what it is saying. It provide a direct capital subsidy to the MSME. This is wrong. Why it is wrong? Because BEIS does not touch the principal amount of the loan. Remember that BEIS has nothing to do with the principal amount. Okay. So it only gives the subsidy on the interest part. It only gives the subsidy, and that too on the interest part. Let me give you one example to make it more clear regarding the BEIS scheme. Right. Let's suppose that you took a loan of 10 lakh rupees. Suppose you took a loan of rupees 10 lakh. Okay. So, BEIS won't reduce that 10 lakh directly. Instead, it reduces the burden of interest that you pay on that loan. Right. So I hope it is clear. What about option B? Option B says that this says that interest subsidy is paid upfront at the loan sanction. This is again wrong. Why it is wrong? Because BEIS is a back-ended subsidy. That means you don't get it immediately or in advance. you get it later after you have served the loan period or installment. That's why it is called backdate. That means you get it later after you have served the served the loan period or installment. What about option C? You provide 5% interest subsidy on the term loan. This is the correct option. Under BEIS, MSME get a 5% interest subsidy. You can see word written 5% interest subsidy, right, on the term loan for up to how much? For up to 5 years. 5% interest subsidy on term loan up to 5 years. And remember, it is paid at the end, not at the start. The purpose is to support technology upgradation, modernization, and other improvement. Let me give you one example. Suppose that you took a term loan with 12% interest. You took a term loan with 12% interest, right? With BEIS, effectively, you will end up paying only about 7% interest because 5% is subsidized, right? That's why. But you receive that subsidy after the loan period, not right away. I hope it is clear. Now, what about the option number D? That's why it is called back-ended. Option number D says it reimburses the full interest part. See, this is again wrong. BEIS does not apply to working capital loan. That to the working, this does not apply to the, remember, BEIS does not apply to the working capital term loan. It only applies to the term loan. It does not apply to the working capital loan. It only applies to the term loan. Please remember it. Term loan which is meant for long-term investment like upgrading machinery or modernizing the unit. For that only BEIS is provided, not for working capital loan. So what we have talked just now, let me just summarize. So I told you the formula of BEIS. The full form is, the full form is back-ended interest subsidy scheme. And remember, 5% subsidy it provide on the term loan. 5% subsidy on term loan, right, up to 5 years and paid after the loan period for modernization and technology upgradation of the MSME. This particular scheme is there. Friends, if you are looking for content, if you are looking for previous year questions or memory based questions which appear in the previous year paper, if you are looking for unit-wise MCQs PDF which caters to 2000 plus MCQs, important MCQs, and if you are looking for, PDFs, concise notes, you can WhatsApp me on this particular number to get more detail regarding the PDF. Right. I will provide you the detail. We have an app called JAIIB and CAIIB Made Simple, whose link is provided in the description section of the video. You can install the app and get access to the course. Many aspirants have cracked the paper in the last examination using our material. Now friends, let's see the next one. Next question is, what does NIC code represent in the context of MSME registration and business classification? Very good question it is. Let's understand. Option number A, says that, a random identification number assigned to the business for tax purpose only. Option B, a unique 5-digit code classifying a business based on its primary economic activity used for MSME registration and policy formulation. Option B, unique 5-digit code classifying business by economic activity. Option C says that code used for export-import licensing. And option D, government issue license number to operate the business. What do you think about, NIC code? So option number A, that is wrong. Why? Because NIC code is not random. So this random word is wrong. You see clearly written here random. No, this random is wrong. Right? It is not, it's not a random and it is not just for tax. It is a systematic classification. Remember, it is systematic classification to show what type of business activity you do. For example, if you are in a bakery, you won't be randomly giving a number or given a number. You will be given a code that identifies bakery or manufacturing activity. Now, what about option number B? So option number B we talk about, this is the correct option. NIC code is a unique 5-digit code. How many codes are there? 5-digit codes are there, clearly written, right? That classify a business based on its main economic activity. So, it is used in MSME registration like Udyam, government policy making, and even a statistical analysis. So for example, suppose there is a manufacturing unit. They are making garment. They will have a different NIC code than a hospital providing healthcare service. So this helps the government know exactly how many MSME are each in sector and what support they need. Right? This is the unique feature of the NIC code. Yes, this is the correct one. What about C? A code used only for export-import licensing and has no role in MSME registration. This is wrong. Yes, NIC code may appear in some export-import paperwork, but they are using the much bigger, which is MSME registration, which is called GST registration. Right? They are also using, overall business classification. So it is not limited to just export and import. What about option D? A government issues license number for operating any kind of business in India. What about option D? Option number D says that when a government issue license number. See, this is wrong. An IC code is not a license. For license, you may need GST registration, right? FSSI for food or shop and establishment license. An IC code is only for classification. Just remember the keyword. An IC is for classification, not for permission. So what we have discussed? What is the full form of NIC? National Industrial Classification, right? Full form is itself a classification. It is a government license number to operate a business. This is wrong. NIC stands for National Industrial Classification. Unique 5-digit code. Please remember the keyword, right? It usually uses a unique 5-digit code, right? And it identifies your business activity. So I hope it is clear this particular example, right? And mandatory for MSME registration in form of Udyam, and also using GST, company incorporation, statistics and policies. Now friends, let's look at the next question. This is regarding the Spurti scheme, right? So the question is asking you, their full form you must remember it, the scheme of fund for regeneration of traditional industry. So it covers the 3 types of intervention to support traditional industry. Which are the following correctly describe these intervention? Option number A say soft intervention, hard intervention, thematic intervention. Option B, soft intervention, hard intervention, thematic intervention. Right, and inside soft intervention also you can see some example: skill development, hard intervention, CFC, thematic intervention, brand building, e-commerce. Similarly, option B is there. Similarly, option C is there. Option D is there. So which option do you think is correct? So let's move through option each and every one by one. First of all, option number A. It says that. So what is the meaning of this soft intervention? Soft intervention means these are the non-physical support activity. Non-physical support activities, right? Like training, skill development, awareness, program, exposure visit, and product design. Then we have hard intervention. After soft intervention, we have the hard intervention, which means these involve infrastructure like common facility center. CFC, what is the CFC? Common facility center, raw material bank, warehouse, and better machinery. And the third we have is called thematic intervention. So which means these work at a broader level like brand building, marketing, company, e-commerce, etc. So let's summarize the key point. So for example, suppose there is a cluster of handloom weaver. Let me give you one example to make this concept clear regarding the Spurti. So suppose there is a cluster of handloom weaver. So there is a cluster of handloom weaver. Now what happened? That in the case of soft intervention, training them in new weaving technology. That is called soft intervention. What definition I told you? That these are non-physical support activity. Right? Like soft intervention could be training them. This is the soft intervention, right? Now training them in new weaving technology. What could be the hard intervention? It could be setting up a common dyeing and finishing unit. That is called hard intervention. And finally, we have thematic intervention. What is thematic intervention? Selling their sari online through e-commerce platform with better branding, right? So I hope it talks about the direct tax exemptions, and subsidies on tax material. I hope it is clear till now. So remember what we learned from this discussion is that we talked about the Spurti scheme. So okay, which option do you think is correct? What about A? A if we talk about, right? So I have given you one example. That is exactly how Spurti will do. Yes, this is the correct one. A is the correct one, right? Because soft intervention are non-physical activity like skill development training. Hard intervention are infrastructure like common facility center, raw material bank, warehouse, etc. And thematic intervention work at the broader level like brand building, marketing campaign, e-commerce support, right? Suppose there is a cluster of handloom weaver. So soft intervention is training them. I have given you example. Okay. Now, that is directly how Spurti works. Option A is correct. What about option B? Option B is wrong because the Spurti is not about giving direct money or tax exemption. It's about training, infrastructure, and marketing support. Three words you must remember. The first word in training, second word is marketing, and third word is thematic support. These are the points. What about option C? Option C again wrong because Spurti is not a loan or a subsidy scheme. It is more about being clustered development. Now let's see the next question. This question was related to the Spurti, right? I hope every point related to the Spurti is clear. Now the next question that we have is regarding the NSIC. So just remember, Spurti stands for a scheme for regeneration of traditional industry, right? So basically, three intervention I told you. Let me just remind you because these are very very important things. So what are the three intervention? Just remember the keyword. Soft means skill training. Soft means what? Skill training, awareness, and exposure. Soft means skill training, awareness, exposure. Hard means what? Hard means CFC. Hard means warehouse. Hard means infrastructure. And finally, thematic. What is the meaning of thematic? Thematic means branding, right? Marketing and e-commerce. Just remember these words. That will help you to remember the Spurti scheme clearly. So friends, just remember Spurti as a three-step process. In the first step, we train. Just remember it. In the first step, we train. In the second step, we build. And in the third step, we market. Like soft is training, hard is building, and thematic is marketing. Just three words: train, build, market. See, not only I am just going through the MCQs. I am just telling you the trick to remember these things. This will help you to build your concept. So soft train, hard build, and thunder, and last is the thematic means marketing. So train people with a skill, build infrastructure, and market that product through the branding and e-commerce. That is the entire scheme in nutshell. If you found the explanation useful, do like, share, and subscribe for more such exam related content. Now we have content available for all the your certification examination. Now friends, let's see the next one. This question pertains to NSIC, National Small Industry Corporation. So which of the following correctly describe the main feature of the NSIC to support MSME? So option number A say capital subsidies and tax exemptions and regulating export licensing. Option number B say that machinery hire purchase, equipment leasing, export marketing assistance, bulk government purchase, etc. etc. Option C say issuing license and giving equity funding to a startup. And option D say NSIC acting as a financial institution giving consistent loan and insurance. So option number A, let's begin with option number A. It says that NSIC provide capital subsidy, tax exemption. This is completely wrong. Why? Because NSIC does not provide tax exemption or control export license. Its role is more about support service. One word if I say, its role is about support service. Okay. Then the giving subsidies. What about B? Yes, B is the correct one. The NSIC provide integrated support service. This is the keyword. Please remember it. They provide integrated support service, right? Like machinery on hire purchasing or leasing, export market assistance, helping MSME participate in bulk government purchase program, distribution of essential raw material, technology upgradation and modernization, industrial training through technical center, even helping to set up a small industry in the developed country, right? Let me give you one example to make it more clear how NSIC help. Imagine there is a small manufacturing unit, right, that cannot afford to buy new machine outright. So basically what will happen? This particular NSIC will give that machinery on hire purchase or lease basis. So this small manufacturing unit cannot afford to buy this machinery. So this NSIC will give machinery to this small manufacturing unit on lease, purchase or hire purchase basis. Lease or hire purchase basis. Similarly, if that unit want to export its product, NSIC can help them with the marketing support and participation in the government tender. I hope it helped you understand the basic concept. Now let's see option number C, which says that NSIC issue license for a small scale industry and fund startup with equity. What do you think? This is wrong. This is completely wrong. Just wait a minute. This is wrong. Why? Because because business license are issued by other authority, not NSIC. And NSIC does not directly give equity funding like an investor. What about option D? This says NSIC merely provide consistent loan and insurance. This is again wrong. Because NSIC is not bank or financial institution. Its role is broader. Promotion, training, support, service, rather than just giving loan. So let me summarize the key point. NSIC full form, remember, National Small Industry Corporation. It is a Government of India enterprise under the Ministry of MSME. It provides machinery hire purchase service, export marketing support, government purchase program participation, raw material supply, technology upgradation. So friends, just remember, NSIC is an all-round supporter of MSME, giving them machine, marketing, training, global exposure. It's like a one-stop solution for the small industry. I hope it helped you understand the basic concept. Now friends, let's switch our focus to the next question that we have. Complete explanation is there for each and every question. Similarly, such kind of previous year question I have already uploaded. 3 to 4 PDF are there. Complete detailed explanation of each and every option. Why one option is wrong, why one option is right. If you want to get detail, you can WhatsApp me on this particular number to get the paid course. Now let's say that one numerical question which was asked in the recent examination. Let's have a look. So the question was right, ABC Limited has the following balance as on 31st March 2025. What is the balance? Let's have a look. Capital they have 8 lakh. Reserve they have 2,50,000. Intangible asset like goodwill and patent they were having 1,20,000. The question was asked to find the tangible net worth. This is called T and W. Very good question. 4 options are given. First of all, I request you to pause the video right now. Try it on your own and then see the explanation. So first of all, we will calculate step by step. The first step to calculate net worth, tangible net worth, is to calculate the net worth. How to go about calculating the net worth? It's very simple. Net worth include capital and net worth include the reserves. Capital plus reserves. How much is the capital we have? Let's have a look. 8 lakh is the capital. Plus reserves. 2,50,000 is the reserves. If you add both of them, this will give you 10,50,000. So this is the net worth, right? This 10,50,000 is the net worth. Is it clear? Now, when we talk about tangible net worth, what we will do is nothing but it is called T and W. T and W is equal to net worth minus intangible asset. Net worth minus intangible asset. Now let's do the calculation part. So what is the net worth? Basically why we are subtracting? Because intangible asset like goodwill, patent, they don't have real physical value. In case of liquidation, so they don't consider tangible. They are not considered tangible. So what is our net worth? Net worth is 10,50,000 and already they have provided you intangible asset is 1,20,000. If we subtract them, we will get 9,30,000. This is our answer. So option number A is the correct one, right? So friends, just remember two formula. The first formula is net worth is equal to capital plus reserve. Second one is tangible net worth is equal to net worth minus intangible asset. So remembering these two formula will help you, right? Just remember. So you can combine both of them. You can just combine both of them. T and W is equal to capital plus reserve minus intangible. No need to calculate separately. Just add capital and reserve and then subtract the intangible. That will give you the tangible net worth. I hope it is clear now. Friends, let's switch our focus to the next question that we have. Let's understand. So basically the question is, which of the following statement best summarize the process and objective of the CAP? What is CAP full form? You must know. Corrective Action Plan, right? For a stress enterprise as per the committee framework. Options are the CAP committee only accept application from the enterprise and must finalize the plan within 5 days. Option B say once a bank or lender requests a CAP, the committee notifies the enterprise within 5 working days and they must submit all liability detail. Option C, under CAP, the enterprise cannot use any further credit and must immediately cease business operation until a plan is finalized. Option D, only secure creditor can be utilized by the enterprise while awaiting the committee's decision on CAP. Very good question it is. Let's understand each and every aspect of it. So first of all, let me just explain what is this CAP all about, right? So basically, what is this CAP? This is called Corrective Action Plan. So basically, it aims to resolve the financial stress. What is the aim of it? To resolving the financial stress, right? Preserve the asset value. Preserve the asset value and allow the enterprise to continue operation. It allows the enterprise to continue operation. So whenever a bank or lender apply, the committee must inform the enterprise within 5 working days. So suppose this is the bank, right? So bank has applied. So what committee should do? So suppose this is the committee. They must inform within how many days? 5 WD, means 5 working days they have to inform. The enterprise is required to submit all the details of all the liability, including those toward the government and unsecured creditor. So submission must be done within the 15 days, right? And if the enterprise failed to respond, the committee can proceed ex parte. You know what is the meaning of ex parte? Ex parte means, can proceed ex parte without this participation. Ex parte means committee can proceed without its participation. Importantly, during the process, the enterprise can continue to use both secured as well as unsecured credit. So they can use both of them, secured as well as unsecured credit, right? So if you look at the option number A, which says that it only accept application from the enterprise, we must be penalized. No. That is wrong, right? They mistake the timeline because it says 5 days. There's nothing like 5 days, right? 5 working days to be more precise. Yes, B is the correct one. B is the correct one, right? Once a bank lend or request CAP, the committee notice an enterprise within 5 working days. The enterprise must submit all liability detail within 15 days, and committee decide on a feasible revival plan. If the enterprise does not respond, the process may expire ex parte. What about C? It says that the enterprise cannot use any further credit. No. This is wrong. Option number D says that only secured credit. No, both kind of secured and unsecured credit can be used. So this is a detailed explanation, as you can see. Full form is Committee Corrective Action Plan, designed to resolve financial stress by providing a workable solution that preserves the asset value. Whenever bank and lender will apply, the committee must inform the enterprise within 5 working days. An enterprise is required to submit detail of all the liability within 15 working days. If there is no response from the enterprise, committee may proceed ex parte. During the CAP process, enterprise can utilize both secured and unsecured credit for business operation until a decision is made. Now, very good question. It is the next question that we have. It asks you that, which of the following is not a correct eligibility criteria for availing the PMEGP second loan scheme. So there is a first loan scheme which we have talked earlier in our previous session. Now we are dealing with the second loan scheme. Option A, the unit first loan under PMEGP or Mudra must have been repaid within the stipulated time. Option B, the beneficiary unit should have been making a profit for the last 3 years. Option C, the beneficiary can only apply for the second loan from the same bank that provided the first loan. Option C, registration of Udyog Aadhar memorandum is mandatory for availing the second loan under PMEGP. Now friends, let's see the correct one. Which option do you think is correct? Let me explain. What is PMEGP second loan scheme? Basically, under this scheme, what happened? Let me use the different color. That unit finance earlier under PMEGP Mudra. Suppose some unit was financed under PMEGP or some unit was financed under the Mudra, right? That particular units, right, where margin money claim has been adjusted and the first loan repaid on time, they are eligible, right? And the enterprise must be profit making for the last 3 years. This is the condition. They must be the profit making enterprise for last 3 years. And UAM, what is UAM? Udyog Aadhar memorandum is mandatory. And the second loan can be taken either from the same bank or from any other willing bank, right? Now let's see the option that we have. So the option that we have, option number A, that should have making the profit for the last 3 years. Yes, this is the correct one, right? For last 3 years. And the question is not eligible criteria. Clearly written not. You have to find the not. What about one? The unit first loan under the PMEGP or Mudra must have been repaid within the stipulated time. What do you think about option number A? Yes, this is also correct one. What about C? The beneficiary can only apply for a second loan. No. Not only for same bank. It can be also take from the other bank, right? So basically unit which is financed earlier under PMEGP or Mudra, where margin money claim has been adjusted and first loan repaid on time, they are only eligible who have repaid the first loan on time. What about D? So UM is mandatory for the availing the second loan. So remember that these 3 criteria, all existing unit financed under PMEGP Mudra whose margin money claim has been adjusted, first loan has been repaid on time, they are eligible. The unit must be profit making for the 3 years to qualify for loan. Registration of UM is mandatory, right? These are the points. Please remember, it's super important. Now friends, let's look at the last question of today's session. This question is about NSDM. Very good question. Which of the following statement correctly describe the key objective and institutional structure of the National Skill Development Mission? Option A, NSDM aims to rapidly speed up skill, right? It aims to rapidly speed up skill development effort by creating an outcome focused framework, aligning employer demand with the citizen aspiration tool, and includes establishing a national database, labor market system, LMIS. B, an NSDM focus only on providing skill training for IT sector job, and its governance is restricted to a single committee under Ministry of Education. Option C, NSDM provide direct finance assistance and subsidies to industry for infrastructure development and has no role in setting a skill standard. Option D, it operates solely at the state level without any central coordination or national level institutional framework. Now let's go through each and every option. Very important question. So in simple word, what is NSDM? It is about giving a skill to the people. Remember the keyword. Let me write down. is about, giving a skill to whom? To the people, right? In such a way that when they learn, what they learn actually matches what the company require. For example, if IT company need more cyber security professional, so NSDM try to ensure that training courses are designed to prepare such candidates, right? Yes. So that is a training course. And one more thing that is very, very important here, that's called LMIS. That is called, labor, market, industry, information system, LMIS. So it also has an LMIS, like a big national database, which tells us what skills are in demand and how many skilled workers are available. This is called LMIS. And this institutional setup, it has three-tier structure. It has a three-tier structure. What is the three-tier structure? The first one is the governing council, which is headed by the prime minister. Who is the second one? Steering committee. Let me write down. Second one is the steering committee, right? And third one is the executive mission directorate. Sometimes, in the next question, exams question may be asked. So how many tiers are there? Three-tier institutional framework are there, right? Governing council, steering committee, prime executive mission directorate. This shows that it's not just one ministry, but a coordinated national level mission, right? What about option B? So option number A is correct. Option B says that it focuses only on providing skill training. It is wrong because NSDM is not just for IT job. It says that only for IT job. No, that's wrong. It is for all the sectors like manufacturing, healthcare, construction, retail, tourism, etc. And it is not run by one ministry but coordinated across multiple ministry and state governments. That's why it is wrong. What about C? C is also wrong, right? Because NSDM is not about just giving money to the industry. Its real job is about setting standards for skill, training people, making sure that different ministry and state work together. For example, sometimes, NSDM, they work with NSDC. NSDM, right? They work with NSDA. What is NSDA? National Skill Development Agency, to create a standardized training module. So this statement is misleading. What about option number D? Option number D is also wrong because the whole idea of NSDM is to have a national framework. Right? The Prime Minister himself heads the governing council. This shows it is centrally coordinated. Yes, states are partner, but there is a strong national level planning. So what we have, before we close the session, let's quickly summarize. I told you about NSDM. So what is NSDM? National Skill Development Mission, to match people skill with the industry demand, creating job and improving the livelihood. We talked about the LMIS. What is LMIS? LMIS stands for, basically this is a database, right? National database, where is the national labor marketing demand to track demand and supply of skill. And institutional structure we talked about, basically it has a governing council headed by the Prime Minister, steering committee, and an executive mission directorate supported by the NSDA, NSDC, and DGT. Right? They cover all the sector, not just IT sector. They work on skill standard, training quality, and coordination. Friends, we have multiple questions available right now. If you want me to...
Question on your screen. Which of the following correctly define the criteria for micro and small enterprise? Right. So the criteria for micro and small enterprise has been asked. Option A micro enterprise has an investment in plant and machinery exceeding 10 crore and turnover not exceeding 50 crore. A small enterprise has investment in plant and machinery not exceeding 1 crore and turnover not exceeding 5 crore. Option C, a micro enterprise has an investment in plant and machinery not exceeding 1 crore and turnover not exceeding 5 crore, and a small enterprise has an investment not exceeding 10 crore and turnover not exceeding 50 crore. That is option number C. Option D, a small enterprise has investment in plant and machinery not exceeding 20 crore and turnover not exceeding 100 crore. So what do you think is the correct answer? So let's analyze each and every option. So according to option A, micro enterprise has investment in plant and machinery not exceeding 10 crore. This is incorrect. This is actually the definition of a small enterprise. This is actually the definition of a small enterprise because micro enterprise have much lower limit, right? If we talk about their investment, so their investment is less than 1 crore and their turnover less than 5 crore, right? So this is incorrect. Option B says a small enterprise have an investment in plant and machinery not exceeding 1 crore. So this is also wrong. This is actually definition of micro enterprise, right? So for micro enterprise, investment is less than 1 crore. If you talk about the small enterprise, right? If you talk about the small enterprise, you must know that for a small enterprise, investment range is less than 10 crore and more than 1 crore, and turnover is less than how much 50 crore, right? And more than 5 crore. So option C says that A micro enterprise 1 crore 5 crore, yes, correct, very nice. And a small enterprise 10-50, yes, this is also correct. So absolutely correct, this is exact definition as per the government revised MSME classification. And option D is also wrong, not exceeding 20 crore and 100 crore, this is wrong, right? So this is the condition for medium enterprise, right? For medium enterprise 20 crore investment and turnover is 100 crore, right? So what we learned from this question, that micro enterprise 1 crore investment 5 crore turnover, a small enterprise 10 crore investment 50 crore turnover. If this investment or turnover crosses this limit, it fall into a different category which we call as medium enterprise. So this is a very important question which is asked every year. You should know the limits of each and every in terms of investment, in terms of their turnover, right? So the explanation is also provided here. You can see option C is the correct answer. Let's see the next question. What is the rate of guarantee fees charged under the credit guarantee scheme for micro and small enterprise, which is called CGMSE, for loan exceeding 5 lakh to women entrepreneur? Very nice question it is. So credit guarantee scheme for micro and small enterprise, CGMSE. So what is the rate of guarantee fee charged under the CGMSE for loan exceeding 5 lakh to women borrower? Option A say 0.5% per annum, 0.75, 0.85 or 1%. You know, 0.5, this is wrong. Option A is wrong. Option A is wrong because this is too low compared to the actual guarantee fee for loan exceeding 5 lakh. Option B say 0.75. This is also incorrect because while this percentage is close, it is still not the official rate charged under the CGMSE scheme. Option C is absolutely correct, 0.85. Remember it. Under CGMSE, if a woman entrepreneur take a loan of more than 5 lakh, the guarantee fee charged is 0.85% per annum of the limit sanction. Let me give you an example. What does this mean? Let's say, मान लीजिए एक woman entrepreneur ने 10 लाख का लोन लिया. Suppose an woman entrepreneur take a loan of 10 lakh under the scheme. So the guarantee fee will be how much? 10,000,000 multiplied by 0.85%. And what will that be? That will be 8,500 rupees per year. 8,500 per year, right? So this will be the guarantee fee. So this fee is collected to provide a credit guarantee, meaning if the borrower is unable to repay, the scheme help protect the lender from financial loss. So ये guarantee fee लिया जाता है women entrepreneur से, right? तो गारंटी फी कितना होगा? 8,500 रुपया गारंटी फी होगा 1 साल का, और ये फी कलेक्ट किया जाता है ताकि ये क्रेडिट गारंटी मिले. मतलब कि यदि बॉरोवर अपने रिपेमेंट करने में असक्षम है तो ये स्कीम हेल्प करता है लेंडर को फाइनेंशियल लॉस से बचने के लिए. सो आई होप दिस मेक द कंसेप्ट क्लियर. द आंसर इज 0.85% ऑफ द per annum, right? And 1% is also incorrect, right? So what we learned, CGMSE scheme provide guarantee coverage to bank for loan to micro and small enterprise. For loan above 5 lakh to women entrepreneur, the guarantee fee is 0.85%. And I request you, in your book you will see a table. आप एक टेबल देखेंगे और उस टेबल में सभी का गारंटी फी दे रखा है. प्लीज गो थ्रू दैट टेबल, right? Very very important from examination point of view. Now let's see the next question. Which of the following is the primary advantage of cluster based finance for MSME? What is the primary advantage of the cluster based finance for MSME? So before answering this question, let me tell you that if you are interested to, if you are looking for the content of MSME examination, I want to tell you that on our app, that is JAIIB and CAIIB Made Simple app, we provide unit wise theory PDF, unit wise MCQs PDF, previous year questions, right? So all these things have helped you to prepare for this examination in a less time and with less effort, because whatever MCQs have been provided, if you go through only them, they are more than sufficient. And if you want to get access to this kind of course which we call certification course in MSME, so you can WhatsApp me on this particular number. Let me write down the number here. So you can WhatsApp me on this particular number, or in the description section you will see the link, right? The course link has been provided. Now let's come back to this question. Which one of the following is a primary advantage of cluster based finance for MSME? So let's answer this question. Cluster based finance. Option A, increase competition among MSME. Option B, risk mitigation. Option C, higher interest rate on loan. Option D, limited access to market. So what do you think? Let's analyze each and every option. Option A, increase competition among MSME. This is wrong, because cluster based finance does not increase competition in a negative way. Instead, it promotes collaboration. It promotes collaboration. Let me give you an example. मैं एक एग्जाम्पल लेके समझाता हूँ आपको. Imagine a group of small textile business worker working in the same industrial area. So a group of textile worker working in a working in a same business area. Instead of competing, they share resource, they share supplies, they share market information, helping each other grow. So this is incorrect. Competition नहीं बढ़ाता है. Risk mitigation. Yes, this is correct. This is correct. Cluster based financing help reduce risk. How does it mitigate risk? it mitigate risk by bringing MSME together, collaboration, just now I have told you. For example, if one MSME face financial difficulty, bank are more likely to support them if they are a part of a successful cluster. बैंक देखिए, मान लीजिए कि एक MSME फाइनेंशियल डिफिकल्टी फेस कर रहा है, तो बैंक उसे सपोर्ट करेगी यदि वो एक फाइनेंशियल क्लस्टर के पार्ट हो, right? So also group knowledge, shared business strategy help reduce financial uncertainties, right? So that is why option B is the correct one. Option C, higher interest rate on loan, this is wrong, because in reality cluster based finance often help MSME get better loan terms and sometimes even lower interest rate. समझ में आया? और ऑप्शन डी कह रहा है कि लिमिटेड एक्सेस टू मार्केट, दिस इज ऑल्सो रॉन्ग बिकॉज दिस अपोजिट इज ट्रू. MSME in cluster often have better market access because they can collectively negotiate with the buyer and supplier. So what we learned from this question, that cluster based finance help MSME. How they help MSME? They help MSME to reduce the risk. You can see the answer. They help MSME to reduce the risk. It promotes collaboration, not competition. It does not lead to higher loan interest, and it enhances the market access. So these are the benefit of the cluster-based financing. Now let's see this question. What is the extent of guarantee cover for micro enterprise with a credit limit of above 5 lakh and up to 50 lakh, effective from 1st April 2023? So very nice question it is. Some percentage has been given to you, right? So question is, what is the extent of guarantee cover for micro enterprise with credit limit from 5 lakh to 50 lakh, right? So option A says 85%, 75%, 80%, 70%. So first option 85% is incorrect. Why it is incorrect? Because you know that the 85% guarantee cover apply only for loan up to 5 lakh. So if you have loan up to 5 lakh, then only this 85% coverage apply, right? This 85% guarantee cover apply for only for loan up to 5 lakh. In the case of micro enterprise, once the loan exceed 5 lakh, the guarantee cover is lower. Now option B says 75%. This is absolutely correct. As per the latest update effective 1st April 2023, the guarantee cover for micro enterprise with loan above 5 lakh and up to 50 lakh, right, up to 50 lakh, in this range 5 to 50 lakh, the guarantee cover is how much? 75%. Let me give you an example to make it more clear. Imagine if a macro business take a loan of 20 lakh. मान लीजिए किसी बिजनेस से 20 लाख का लोन लिया. If a macro business take a loan of 20 lakh, okay, now 75% of this amount, what will be? 75% कितना होगा 20 लाख का? 15 लाख. So 15 lakh is covered under the guarantee scheme. Remember, this 15 lakh is covered under the guarantee scheme, right? This 15 lakh is covered under the guarantee scheme, reducing the lender's risk. It obviously reduces the lender risk, right? Whoever is lending, it reduces the risk. So remember, from 5 lakh to 50 lakh, the coverage, the guarantee cover is 75%. And now option number C say 80%. This is also wrong because you know 80% guarantee cover apply to only MSE located in the north ईस्ट रीजन. देखिए मैं एक क्वेश्चन से आपको कितना कंसेप्ट क्लियर कर रहा हूँ. मान लीजिए अगला सवाल पूछ दे आपसे कि बताइए कोई नॉर्थ ईस्ट रीजन में है तो उसको कितना गारंटी कवर मिलेगा, तो सही जवाब होगा उसका 80%. ठीक है, तो दिस इज द वे ऑफ लर्निंग. फ्रॉम अ सिंगल क्वेश्चन we can create 4 other question, and there is a high possibility of them asking in the upcoming examination, right? And option number D says 70%. So the guarantee cover for micro enterprise above 5 lakh up to 50 lakh is not 70 but 75%. So what we learned from this question, we have just learned that up to 5 lakh the guarantee cover is, just wait a minute, up to 5 lakh it is 85%, from 5 to 50 lakh it is 75%, and if northeast region, right, MSE northeast region, then up to 50 lakh it is 80%, right? This is remember. And remember, from 50 lakh to 500 lakh, let me also know, you should also know this, in the northeast region we are talking about. In northeast region, from 50 lakh to 500 lakh, right, it is how much? It is 75%, because as the amount increases, guarantee cover decreases. That is the key point. So I hope this make your concept crystal clear. Now let's move to the next one. फ्रेंड्स, आपसे एक रिक्वेस्ट है, आपने यदि MSME का एग्जाम दिया और आपको यदि क्वेश्चन आंसर करना, आप यहाँ पे लिमिट देख सकते हैं. प्लीज गो थ्रू दिस लिमिट, सुपर इंपॉर्टेंट. आप इसका स्क्रीनशॉट भी लेकर रखिए क्योंकि ये सवाल बार बार पूछा जाता है. फ्रेंड्स, इफ यू वांट टू शेयर क्वेश्चन विथ अस, आप हमसे यदि क्वेश्चन शेयर करना चाहते हैं जो एग्जामिनेशन में आया है, तो यू कैन व्हाट्सएप मी ऑन दिस पार्टिकुलर नंबर, एंड आई गारंटी फॉर दोज कैंडिडेट हु विल शेयर क्वेश्चन विथ अस, आई विल प्रोवाइड यू स्पेशल डिस्काउंट ऑन एनी अदर सर्टिफिकेशन एग्जाम कोर्स, बिकॉज यू नो इन आवर ऐप वी हैव सर्टिफिकेशन एग्जाम कोर्स फॉर ऑलमोस्ट ऑल 6 सर्टिफिकेशन. हमारे ऐप में सभी 6 सर्टिफिकेशन कोर्स अवेलेबल है. तो जो भी लोग हमारे साथ क्वेश्चन शेयर करेंगे इस नंबर पे, तो उनको मैं स्पेशल डिस्काउंट प्रोवाइड करूंगा इस पार्टिकुलर कोर्स पे. नाउ लेट्स सी द नेक्स्ट क्वेश्चन. द नेक्स्ट क्वेश्चन दैट वी हैव, you can see that what is the composite loan limit for a small manufacturing enterprise. So very nice question. You know about composite loan scheme, we have talked about it earlier. So option A say 50 lakh. This is wrong because 50 lakh is a significant loan amount. It is not the upper limit for the composite loan given to SME, right? So this is wrong. Option number B says 75 lakh. This is also wrong because the limit is higher than 75 lakh. Option C say 1 crore. Yes, it is correct. You know, 1 crore composite loan limit for a small manufacturing enterprise is 1 crore. Now you might wonder what is this composite loan. Composite loan क्या होता है? देखिए composite loan के अंदर working capital भी आएगा. मीन्स जैसे working capital आप जानते हो ना daily operation के लिए. It includes working capital for daily operation and it also includes term loan, right? It also includes term loan. Term loan is given for what? For buying equipment, for buying machinery. This term loan is provided. So that is why it is called composite, because it contains both the working capital part also and term loan part also. For example, if a small manufacturing unit want to buy new machinery worth 60 lakh, right, and that is term loan because they want to buy new machinery and this is the part of their term loan, you know it very well. And also this manufacturing unit need 40 lakh, use 40 lakh for raw material and daily expense, that is working capital. So the total loan needed is how much? 1 crore, right? So which fall within the composite loan limit, you should remember it. And 1.5 crore is wrong. So what we learned from this question, that whenever you see this word composite loan, it means two things: working capital plus term loan, right? So what a small manufacturing enterprise, remember a small manufacturing enterprise, the limit is 1 crore. So this help MSME invest in equipment, technology and daily operation. So I hope this was clear to you. If it is clear, if you like the video, please hit the like button and do subscribe to our channel for such kind of content. Now let's see the next question. Very nice question. What is CGT-MSE fee for loan up to 5 lakh for women and enterprise located in the northeast? Right. So option is say 0.5%, 0.75%, 0.85%, 1%. What do you think is the correct answer? First option 0.5%. This is wrong. 0.5%, you know that this is not the correct CGT-MSE fee for loan up to 5 lakh. The actual rate is higher. Now option number B say 0.75% per annum. This is actually correct. You know what is CGT-MSE? First of all, you should know the full form of it. Let me write it down. It stands for Credit Guarantee Fund for MSME, for MSE, micro and small enterprise. Credit Guarantee Fund for micro and small enterprise. You know, it provides financial security to bank when they lend to a small business, right? So whenever bank lend to a small business, so the CGT-MSE provide financial security to the bank, right? So you know, for loan up to 5 lakh, the guarantee fee is 0.75%, and for women entrepreneur, it is also for women entrepreneur as well as enterprise located in the northeast region. Let's give you an example. So for example, if a woman entrepreneur take a loan of 5 lakh, suppose a woman entrepreneur take a loan of 5 lakh under CGT-MSE, so her guarantee per year will be how much? 5 lakh multiplied by 0.75%, and if you calculate it, you will get 3,750 rupees per year. So the low fee structure encourage bank to lend to women business in the northeast by reducing their risk. Earlier what we talked about, इससे पहले भी क्वेश्चन था, याद है आपको? If you remember it, there was a guarantee fee. There was a guarantee fee, and this is the CGT-MSE fee. So both are different. Guarantee fee was 0.85%, if you remember it, and here we are talking about CGT-MSE fee, right, which is 0.75%. So the lower fee structure encourage bank to lend to women and business in the northeast by reducing their risk. So what we learned from this question, that CGT-MSE provide credit guarantee to banks for MSME loan, and for loan up to 5 lakh, women and northeast enterprise 0.75%. For loan above 5 lakh, fee increase to 0.85%. You must remember it. For one more information I am providing you, that up to 5 lakh, if this is the 5 lakh, the CGT-MSE fee is 0.75, and more than 5 lakh, CGT-MSE fee is 0.85%. So I hope this make the concept clear. That okay. Now let's see the next one. So friends, next question is, what is the bank limit for working capital based on turnover method? Very simple question it is, right? I think you know the answer. So please answer it. Is it 10% of the projected sales turnover? Is it 15%, 20% or 25%? What do you think? So option number A says 10% of the projected sales turnover. This is incorrect. You know, this 10% limit is too low, right? ये बहुत कम है. Right, business need more liquidity to manage their daily operation. 15% is also low, right? Correct answer is 20%. 20% of the projected sales turnover. What does this mean? That means bank calculate working capital limit as 20% of the projected sales turnover. This ensure that business have enough cash flow to manage raw material purchase, salary paying and handling operating expense. Let me give you an example. एक एग्जाम्पल लेके समझते हैं इसे. मान लीजिए एक बिजनेस जो है सेल्स टर्नओवर को प्रोजेक्ट करता है. सपोज अ बिजनेस प्रोजेक्ट सेल्स टर्नओवर ऑफ ₹1 crore, right, for the year. So it projects sales turnover of ₹1 crore. Now bank will provide 20%. What is the 20% of 1 crore? That is 20 lakh. So bank will provide 20 lakh as the working capital limit. So this 20 lakh is the working capital limit, right? So this helps the business run smoothly without cash shortage, right? So option number D, 25%, this is wrong, right? Because 25% is higher than the standard percentage. So what we learn from this question? We learn from this question is that turnover method, in this turnover method, bank provide 20% of the projected sales turnover as a working capital. It helps business manage daily expense like salaries, raw material and operation. If projected sale is 1 crore, so working capital limit is 20 lakh. So I hope this make the concept clear, right? Now let's see the next one. The next one is, according to the investment criteria, a service enterprise is classified as a small service enterprise if its investment and equipment is up to how much, right? Option number A say 50 lakh. What do you think? This is incorrect. 50 lakh is too low to qualify as a small service enterprise. Instead, this amount is closer for the micro service enterprise. Service enterprise, if you categorize it, there is one called micro service enterprise, there is one called small service enterprise. So the question is asking you about the small service enterprise, so it is near the micro service enterprise, so this is wrong. What about 1 crore? 1 crore is also wrong. 1 crore is a significant investment, but it is not the correct upper limit for a small service enterprise. 2 crore is the correct answer, right? A small service enterprise is defined as a business in the service sector whose investment in equipment does not exceed 2 crore. मतलब ये हुआ कि स्मॉल सर्विस एंटरप्राइज एक ऐसा बिजनेस होता है हमारे जिसका इन्वेस्टमेंट जो है खासकर सर्विस सेक्टर में, क्योंकि क्लियरली लिखा हुआ है सर्विस सेक्टर. So it is a business in a service sector whose investment in equipment does not exceed 2 crore. Right? How? This classification is very important because it helps business avail government benefit like subsidies, lower interest loan, and it differentiate MSME based on the investment capacity. Let me give you an example. मान लीजिए एक business, suppose a business in the IT service sector invest 1.8 crore, right, in the server, in the computer, in the software. Right, so suppose a business in the IT service sector invest 1.8 crore in the server, computer, software. So since the investment is under 2 crore, it qualifies as a small service enterprise and can access MSME benefit. Right, 5 crore is wrong. So what we learned from this question? We learned that a small service enterprise means investment in equipment up to 2 crore. Right, a small service enterprise means investment in equipment up to 2 crore, and micro enterprise have lower limit while medium enterprise have higher limit. So for example, if an IT firm invests 1.5 crore in equipment, it qualifies as a small sector enterprise. I hope this makes the concept clear. Now let's see the next one. For a small manufacturing enterprise with a good track record, collateral security can be waived up to. Very nice question, right? 10 lakh, 15 lakh, 25 lakh, 50 lakh. 10 lakh is wrong. While banks sometimes provide collateral free loan up to 10 lakh, the actual waiver limit for a small manufacturing enterprise is higher. 15 lakh is also wrong. Correct answer is 25 lakh. Option number C is the correct answer. You know why? Because bank can waive collateral security up to 25 lakh for a small manufacturing enterprise that have good credit history. Track record means what? अच्छा credit history हो, consistently repaid loan on time, and a strong business performance record. For example, imagine a small business manufacturing electronic component, right? That has been running successful for 5 years. So suppose a small business manufacturing electronic component, it has been running successfully for the last 5 years. If they apply for loan up to 20 lakh, right, the bank may approve it without requiring collateral, making it easier to access the credit. 50 lakh is wrong. So what we learned? Collateral free loan for a small in manufacturing enterprise up to 25 lakh, right? So no need to place any property or asset for the loan within this limit. It encourages a small business to expand without financial stress. So that is why collateral free loan is applicable. Now this is a great question. Let's answer this question. If an MSME unit hold a margin of 20 lakh and its projected sales are 400 lakh, what will be its working capital limit? Options are 40 lakh, 60 lakh, 80 lakh, 100 lakh. First try it yourself. पहले आप खुद से try करें, फिर explanation को सुनें. So the question is how to calculate this WCL. What is the meaning of WCL? Working capital limit. Bank use something called turnover method. You know about this? Bank use something called turnover method to calculate it. I think we have talked about it earlier. As per the turnover method, it says that working capital limit is equal to 20% of projected sale. 20% of projected sales. I think we know it, right? Now what is the projected sale here? Projected sales is 400 lakh. So what is the 20% of 400? 20% of 400 is 80 lakh, right? So the margin of 20 lakh, you know, this margin is given 20 lakh. This margin is a part of the business on fund and does not directly affect the working capital limit calculation in this case. So it has no role to play here. So the answer will be option number 3. This is 20 lakh is just given to confuse you, right? So margin has no role to play here, because you know margin is a borrower contribution. It has nothing to do with the working capital limit. So correct answer is option number C, right? So what we learned, that imagine a manufacturing unit expecting annual sales of 400 lakh. To run smoothly, it needs a working capital loan from a bank. Using the turnover method, the bank allow 80 lakh as a working capital limit, right? So what we learned, turnover method, working capital limit is 20% of the projected sale, and formula is quite simple, and margin does not affect this calculation directly. That is why just given to confuse you, right? Let's see the next question that we have. The next question is on your screen. You can see. Friends, if you want such kind of PDF, you can WhatsApp me on the number provided in the screen, right? We have such kind of previous year almost 3 to 5 sets available, which have been collected memory based. Now question is Khadi village industry considered part of micro and small enterprise irrespective of investment in plant and machinery? What do you think? Option A say yes, option B say no, option C say let's discuss. So let's answer this question. Option A say that yes, Khadi and village industry are always considered a part of MSE regardless of investment in plant and machinery. This is absolutely correct. You know, KVI, in short we call this Khadi village industry as KVI, and this KVI is directly supported by the Ministry of MSME and KVIC. So Ministry of MSME supported and KVIC, which is Khadi Village Industrial Commission, supported. Unlike regular MSE, KVI unit are included under the MSE category regardless of their investment in plant and machinery. No matter what they have invested in plant and machinery, they will be included under KVI, MSE. They are included under micro small enterprise category. So you know, a special government scheme you might have heard like PMEGP. What is PMEGP? Prime Minister Employment Guarantee Program. And you might have heard of Spurthi. What is Spurthi? Let me show you. Option A is correct here. Let me show you what is Spurthi. You can see it here. So Spurthi, you can see it stands for, let me tell you the full form of Spurthi. You can see, yeah, a scheme of fund for regeneration. You can see a scheme of fund for regeneration of traditional industry and Prime Minister Employment Generation Program. You know, these schemes, special government schemes are there which provide funding and assistance to this industry. And you know, the government recognized the social and economic importance of KVI in rural employment generation. So they are always considered part of the MSE, no matter whatever they have invested in plant and machinery, right? So there is a Khadi Gramodyog Vikas Yojana. It is an umbrella scheme under two major components, Khadi Vikas Yojana and Gramodyog Vikas Yojana, aimed at development of KVI. You should know this because question may be asked, right? Option B say no, Khadi and village industry are not related to MSE. This is wrong. Option number C say Khadi and village industry are part of MSE only if they are invested in plant machinery below a certain limit. This is also wrong. There is no limit, right? So what we learned from this question, that Khadi and village industry is always part of MSE. No investment limit apply here. It is supported by Ministry of MSME and KVIC through various government scheme, and there are some program which I have just talked now, like PMEGP program, Spurthi program, right? So which help in funding and rural employment. So unlike regular MSME, KVI is included under MSE without checking investment in machinery, right? That is the point. Now what is the primary purpose of DRT? To handle civil dispute, to facilitate the debt recovery process for bank, to adjudicate criminal case involving financial fraud, and to provide legal representation for borrower in the court. So what do you think? The primary purpose of DRT? DRT stands for Debt Recovery Tribunal, right? So option A says that to handle civil dispute unrelated to the financial matter. Is it correct? No, because DRT are not general civil court. They specifically deal with loan recovery case. Option B says that to facilitate the debt recovery process. Yes, it is correct. You know that DRT were established under the RDDBI Act. You know about it. RDDBI Act. That is Recovery of Debt Due to Bank and Financial Institution Act 1993. And their purpose is to speed up the recovery of NPA and help bank recover large outstanding loan. And DRT handle dispute of 20 lakh and above, right? So greater than 20 lakh or equal to 20 lakh and above, they handle the dispute. And appeal against the DRT decision goes to DRAT. You must know this. DRAT stands for Debt Recovery Appellate Tribunal. For example, let's suppose a business takes a loan of 50 lakh from a bank but fails to repay it. He does not repay it. Instead of filing a case in the regular court, which takes year to complete, the bank can approach the Debt Recovery Tribunal for a faster decision. That is the role of DRT. So option B is the correct answer here. Right. Let's see the next question. The next question and final question of today's session is, you can see, which organizations serve as the Federation for Small and Medium Industry in the West Bengal? So option A, West Bengal Micro Small Facilitation Council, Federation of Small and Medium Enterprise Unit, West Bengal MSME Development Corporation, and Khadi and Village Industry Commission. Correct answer is FOSMI, that is Federation of Small and Medium Enterprise. Right, you should know about it that this was established. This is the primary organization representing a small and medium enterprise in West Bengal, established in 1952. This focuses on development of a small industry and provide various services. CLCSS, right? Which of the following is covered under the CLCSS for MSME? So let's see the option that we have. The first option say providing. What is CLCSS? Credit Linked Capital Subsidy Scheme. First of all, you should know the full form, right? So option is providing working capital loan to MSME. So what do you think? See, this sound reasonable, right? But it is not correct for CLCSS. The scheme is focused on what? The scheme is focused on technological upgradation, right? This CLCSS scheme is focused on technology upgradation, not general working capital loan. Such loan are usually handled by bank under other scheme like CGT MSE. Now option B says offering 15% subsidy on technology upgradation investment up to rupees 1 crore. Yes, this is the correct answer. CLCSS provide a 15% subsidy to MSME for upgrading their technology, making it their production process more efficient and competitive. You imagine a small manufacturing unit upgrading from manual to automated machinery. So a small manufacturing unit which is upgraded from, earlier it was manual system, and now it has been upgraded from manual to automated machinery, right? So if the investment is rupees 50 lakh, suppose the investment is rupees 50 lakh, so they can get 15% subsidy. 15% subsidy they can obtain, and that is how much? 7.5 lakh saved. 7.5 lakh rupees will be saved. So option B is the correct answer. Now let's see the other option we have. Option C says that again I am repeating this particular concept. This says that I have taken a small manufacturing unit which upgraded from manual to automated machinery, and investment is 50 lakh, so they can get 15% subsidy. I think 15% will not be 7.5 lakh. This will just be 50 lakh. Yes, 7.5 lakh. So they will get 7.5 lakh subsidy, right? So offering us 15% subsidy on technology upgrades and investment up to 1 crore. Right, so this is CLCSS. Now option C says granting direct financial aid for MSME expenses. This sound helpful, but it is not a part of CLCSS. This scheme does not provide direct financial aid. It focuses solely on subsidies for technology upgrade. And option D says subsidizing raw material costs for MSME. This is unrelated to the scheme. CLCSS has nothing to do with raw material subsidy. So the right answer is option number B. So the key points which we come to know from this particular question is that CLCSS focus on technology upgradation. First of all, you should know that is focus on technology upgradation, right? And the second point is that it provides 15% subsidy on eligible investment up to rupees 1 crore, and it does not cover working capital loan. What are not covered? Working capital loan are not covered. Then aid, financial aid is not covered, or raw material subsidy are not covered, right? So these three things are not covered under it. Now let's see the next question we have. Let's MCQs. Question number 2, as you can see on composite loan. So the question you can see, which of the following statement regarding composite loan for MSME is not correct, right? So this is the question. So remember, we are looking for incorrect statement here, right? So let's see the first option. A composite loan of up to rupees 1 crore can be sanctioned by bank under a single window. This is absolutely correct, because composite loan allow MSME to get funding for both working capital and fixed capital, right? Like buying, suppose you are buying machinery, that is fixed capital. So composite loan allow MSME to get funding for both working capital as well as fixed capital under a single application to avoid unnecessary paperwork. So let me give you an example. Suppose an MSME apply for 50 lakh. Suppose an MSME apply for 50 lakh rupees to buy machinery, right? And rupees 10 lakh for daily operational expense, for daily operational expense. So they get both under one loan, right? So a composite loan up to 1 crore can be sanctioned by bank under a single window for a working capital loan as well as a fixed capital loan, right? Suppose MSME apply for 50 lakh to buy machinery and 10 lakh to cover daily operational expense, so they get both under one loan. Now option B says that bank sanctioning a term loan must also sanction a working capital limit to avoid delays in production. Yes, this is also correct, because this ensures that when business invest in long term asset like machinery, they don't face cash flow problem, and they don't face cash flow problem for daily operation like paying for electricity or labor. Option C says that composite loan are provided only for purchasing raw material, not for machinery. This is incorrect statement, and hence the correct answer to our MCQs, because these composite loan are not restricted to just raw material. They cover working capital loan also like raw material, and fixed capital loan also like machinery. For example, imagine an MSME buying advanced packaging equipment while also needing fund to buy packing material. So composite loan can cover both. And option D says that, let's see the option number D, just wait a minute. Yeah, the RBI master direction dated July 24, 2017 governs the sanctioning of the composite loan. So see, this is correct, because RBI guidelines are crucial in regulating composite loan and ensuring MSME get the support they needed. So the correct answer to this particular question is option number C, right? That composite loan are provided only for purchasing raw material, not for machinery. This is incorrect, because this is the right choice of this question. So you should know that this composite loan cover both the fixed and working capital. Fixed capital also cover, working capital also cover, and they are sanctioned under a single window. You should know this, they are sanctioned under a single window. And term loan and working capital loan limits are combined to avoid production delay, and RBI master direction dated to July 24 governs composite loan. I hope this breakdown cleared up your doubt about the composite loan. If you really find it helpful, don't forget to like, share and subscribe for more simple and clear explanation. Now let's see the next question. The next question is regarding when a shareholder, who can be a shareholder in a public limited company, right? PLC means public limited company. Who can be shareholder? So friends, let's see the first option. Only the company executive can be the shareholder. This is incorrect, because public limited company are open to anyone who meets the investment requirement. Limiting shareholder to just company executive is not how it works. So for example, if only the CEO, CFO and a few executive could buy share, it would not be called a public company, right? Now the next option says only individual investor. See, this is also incorrect, because individual investor can buy share. Public company welcome a wider pool of investor. It welcome a wider pool of investor. Now option C says that only business partner and financial institution. Again, this is incorrect. Why? Because business partner and financial institution can invest, but they are not the only one who can. And option D says individual, business partner and financial institution. This is the correct answer. That a public limited company can issue share to a variety of stakeholder, including individual like you and me, business partner and financial institution like bank. Think of a company like a Reliance Industry. Its shares are bought by individual investor, mutual fund and other business like. So the correct answer is option number D, right? So let's summarize the key point. The key point here is that public limited company are open to multiple type of investor. Shareholders can include individual, business partner and financial institution, and they are not limited to executive or special investor category. I hope this explanation make the concept easy to understand. Now let's see the next question, that is our question number 4 from the previous year asked question. Now this is based on hand holding stage for rehabilitation of MSE. So the question is, which of the following is not a criteria for a MSE account to reach the hand holding stage in the rehabilitation process? Very nice question. So let's answer this particular question. So friends, option A says that the delay in commencement of commercial production by more than 6 months due to reason beyond the promoter's control. So what do you think? This is correct, because if an MSME can't start its operation within 6 months, so suppose there is an MSE, it can't start its operation within the 6 months, right? Due to uncontrollable factor like government delay or natural disaster, the account may need support through rehabilitation. Account has to be supported through what? Through rehabilitation, right? So for example, imagine an MSE factory delayed by heavy flood. So suppose heavy flood came and it delayed MSE factory. So this would qualify for hand holding support, right? This will automatically qualify for hand holding support. Now option B says that company incur losses for 2 years or cash loss for 1 year beyond the accepted time frame. This is another valid reason, because persistent loss indicate that business is struggling and may require intervention, right? So business is struggling and it may require intervention because the company is struggling, right? So for example, if a small manufacturing unit continues to operate at a loss for 2 consecutive years, so it becomes clear candidate for handholding, right? So this is also correct. So question is which is not correct, right? You should remember option C says that sales exceeding 75% of the projected level in terms of the value during a year. This is incorrect statement and hence the correct answer. If the sales are, suppose if the sales exceed 75% of projection, so sales exceed 75% of projection, it shows the business is performing fairly well and does not require rehabilitation. Obviously sales is larger than the 75% of the projection, so business is performing well. So why there is a need of rehabilitation? In fact, such business are considered as stable and successful. And option D says that capital utilization is less than 50% of the projected level in terms of quantity. This is the valid reason for hand holding, because the capital utilization is low. This is called low capital utilization. This is called low capital utilization. So the low capital utilization signals inefficiency of a poor market demand. If a business that projected 1000 unit per month is only producing 400 unit, it may need hand holding support, isn't it? So if the capital utilization is less than 50% of the projected level, suppose the business projected that projected 1000 unit per month, business projected 1000 unit per month, but it is only producing 400 unit. So what would that be? It will need hand holding support, right? So the correct answer is option number C, right? So let's summarize the key point just now. So hand holding support is provided when business face delays, losses or underperformance issue, right? Then hand holding support is provided, and key triggers include delayed production, persistence loss or low capital utilization. Sales exceed 75% of the projection means the business is stable and does not need rehabilitation. I hope this makes your concept clearer. Now let's see the next question. The next question is based on CAIIB. Under which act is the CAIIB licensed? Very good question. So let's go through the option. The first option says BRA. This is incorrect because Banking Regulation Act governs how banks operate in India, including rules related to their management, right? So this is incorrect. Option B says Companies Act 2013. Exactly, this is the correct answer. That CAIIB registered as a company under the Companies Act 2013, and this act governed the formation, regulation, dissolution of a company in India. I am giving example, just like Tata, just like Infosys, right, are registered as company under the act. CAIIB follow the same legal structure. And the last option C says SARFAESI, that is securitization and reconstruction of financial asset and enforcement of security interest. So this is a tricky option because SARFAESI Act clearly defines the purpose of CAIIB, which is to record charge on secured loan. However, it does not license CAIIB. So suppose if a bank want to secure a loan against property, the details are registered with CAIIB under the SARFAESI provision, but SARFAESI only provide the legal framework, not the licensing. And option D is RBI Act. This is absolutely incorrect because RBI Act is mainly concerned with the regulation of monetary policy and the functioning of central bank in India. That is why option number B is the correct. So what is the key takeaway from this particular question? The thing is that CAIIB is a central registry that record information on secured loan to prevent fraud, and it is licensed under Companies Act 2013. SARFAESI provides its legal purpose but does not handle its licensing, and Banking Regulation and RBI Act are unrelated to its licensing. Right, so the question was regarding the licensing of that. Okay, I hope you are understanding each and everything. Don't forget to hit the like button, right? If you really think that this effort is useful, I will bring more and more MCQ session on like this. Please proper explanation of each and every question, which will provide you conceptual clarity, and if you get such question in examination, you will confidently answer it. Now let's see the next question. The question is regarding the legal status of a business entity. Very good question it is. Let's see which of the following statement is not correct regarding the legal status of proprietorship and partnership firm. So basically it is regarding the legal status of the sole proprietorship and partnership firm in India. Let's see the option. Option A says a sole proprietorship is not recognized as a separate legal entity from its owner. So what it is saying? It is saying that in a sole proprietorship, the owner and business are the same legal entity. What do you think? Is it clear? Is it so that in a sole proprietorship the owner and business are the same legal entity? There is no legal distinction between the owner personal finance and the business finance. Obviously, for example, if a shopkeeper takes out a loan for his business and can't repay it, his personal asset can be used to settle the debt. So that is why in a sole proprietorship is not recognized as a separate legal entity from its owner. Exactly, this is correct. Now option B says that a partnership firm is recognized as a separate legal entity from its partner. This is incorrect, and this is the correct answer to this question, because in India a partnership firm is not a separate legal entity from its partner. The partner are personally liable for the debt and obligation of the firm. For example, if a partnership firm default on a payment, creditor can go after the personal asset of the partner. Now let's see the option C. Just wait a minute. I hope it's clear. Now option C, they say that in the sole proprietorship the owner has unlimited liability for the business debt. Unlimited liability. So unlimited liability means if the business incur debt, the owner is personally responsible for paying them off, even if it means selling a personal property. Exactly. Suppose a sole proprietor run a bakery and he faces the loss. He may have to sell his car or house to settle the debt. And option D says that in a partnership firm, the partners share liability for the firm obligation. Yes, this is correct, because partners share both the profit and liability of the business. They share both. They share profit also, and they share the liabilities also. So if one partner default, the other partner can also be held liable for the firm obligation. So in a partnership of 3 people, if one partner disappear, the remaining 2 are still responsible for settling debt. So the correct answer to this particular question is option number B. Let me show you again option number B what it says. Option B says that a partnership firm is recognized separate legal entity from its partner. No, this is wrong. So you should know that sole proprietorship and partnership firm are not separate legal entity. In both firm, owner or partner have unlimited liability for debt, and the incorrect statement is that a partnership firm is a separate legal entity. It is not, and partners share profit and liability equally unless otherwise agreed upon. Now let's see the next question. Under the SARFAESI Act, what is the minimum notice period that a secured creditor must provide to a defaulting borrower before taking the possession of the secured asset? Very good question it is, right? So we will break down each and every option, explaining in simple terms. So let's see the option: 30 days, 45 days, 60 days and 90 days. So option 30 days is incorrect, right? 45 days is also incorrect. But the correct answer is 60 days. Let me tell you about the section number. About the section 13 subsection 2 of the SARFAESI Act. You should know about it. This section of the SARFAESI Act, it says that the secured creditor must issue a demand notice giving the borrower. So here the keyword, issue notice and demand notice, right? Giving the borrower a 60 days to repay the outstanding loan. What happens next? If the borrower does not repay or respond, the creditor can proceed to take possession of the security or secured asset under the section 13 subsection 4. So possession is listed under section 13 subsection 4, right? So here correct answer will be 60 days, right? So suppose a borrower default on a home loan, the bank send a notice, right? The bank send a notice demanding repayment within 60 days. If the borrower does not repay, the bank can take control of the property. Option D say 90 days. This is incorrect, because 90 days is longer than the required notice period under SARFAESI. So the correct answer is option number C, that is the 60 days. You should remember this concept, very very important examination point of view. Now let's see the next question, that which of the following statement is not true regarding the difference between LLP and a private company in India. LLP is called limited liability partnership, and private company you are well familiar with. So option A says that LLP is governed by the Limited Liability Partnership Act, while the private company is governed by the Companies Act. What do you think? This is the correct. And you must keep in mind that not correct has been asked. This is correct. Why it is correct? Because LLP in India are regulated by the LLP Act 2008, while the private company are follow the provision of the Companies Act 2013. Now option B is, let's go to the option B. Just wait a minute, I'm coming to option number B. Yes, option number B is here. A private limited company must have its account audited annually, while the LLP exempted from audit regardless of its turnover. This is incorrect, right? This is incorrect. You should know that a private limited company must indeed get its account audited every year, right? Private limited company, or we can say PLC, must get its account audited every year, right? It should get account audited every year, right? So a private limited company must get its account audited every year, but saying LLP are completely exempted from audit is wrong. LLP are required to get their account audited. So see, LLP will get their account audited if the turnover exceed 40 lakh. So the condition for LLP to get account audited is that turnover should exceed 14 lakh or their capital contribution exceed 25 lakh. Capital contribution should exceed 25 lakh. For example, imagine an LLP making 50 lakh in turnover. Suppose an LLP is making 50 lakh in turnover, so it must get his account audited even though it is not a company. So the statement claiming LLP are fully exempted is incorrect. You can see what is it claiming. The statement is claiming that LLP is fully exempted from audit. No. How it is possible? They are not fully exempted. Option C says that a private limited company can raise equity capital from investor, where LLP cannot issue share to raise equity funding. See, private limited company can issue share to raise fund from investor, right? They can issue share. They can issue share for what? They can issue share to raise fund. To raise fund from where? Investor. So they can issue share to raise fund from investor. On the other hand, LLP can't issue share. LLP cannot issue shares. Funding comes through partner contribution only, right? And so this is also what is say LLP cannot do. Yes, this is also correct. An LLP partner have the flexibility to manage the business directly, while in private limited company, director manage the private company on the behalf of shareholder. What do you think? Is it correct? Option D. In LLP, the partner manage their day-to-day operation directly. In the private limited company, director handle management on the behalf of the shareholder. So the correct answer is option number B, right? So you should know that private limited company must have account audited annually, while in case of LLP, this is wrong. So let's summarize the fact. They are governed by the different act. We know it about it. The LLP needs audit if turnover exceed 40 lakh or capital exceed 25 lakh. Private limited company must get audited annually. Always. Private limited company can't issue share. Private limited company can issue share, but LLP can't issue share. And LLP partner manage directly. Company have directors. I hope this makes the concept clear. Now let's jump over to the next question, and which is a very nice question, right? It is based on which of the following is not one of the 5 C's of credit used by lenders to assess a borrowed credit worthiness. Not a 5. See the word not 5, right? So the first option say character. Character is one of the borrower, right? Character is one of the 5 C's of the credit. There is something called 5 C's, right? Character refers to the borrower trustworthiness and willingness to repay the loan. For example, lender assess your repayment history through your credit score and previous loan record to evaluate your character. The option B says capacity. Capacity is about your ability to repay the loan based on your income and financial obligation. The bank will check your income, expense and debt to income ratio before giving you loan. Then the third option we have is capital. This is another important C, right? So capital refers to the borrower on money invested in the business or asset. If you are taking a business loan, the bank will check how much of your on money you have already invested. Option D say collateral. This is definitely one of the 5 C. Collateral is an asset that the borrower places as security for the loan. And what is the option E? Let's see the option E. Option E I think is compliance. Yes, compliance is not there, right? Because what are the 5 C's? Let me remind you what are the 5 C's. The first C is character, capacity, capital, collateral, and last is condition like economic factor. There are some condition like economic factor. So the compliance, which refers to following legal or regulatory requirement, is not a factor in credit assessment. So 5 C's are character means trustworthiness, capacity means ability to repay the loan, capital means borrower's own investment, collateral means security for the loan, and condition means market or economic condition. Compliance is not one of the 5 C's. So these 5 C's plays a crucial role for credit used by lender to assess a borrower creditworthiness. Now let's see the next question. Which of the following statement is not true regarding the common seal of a company? Very nice question. Common seal, first of all, let's see the options that we have. Option A says that the common seal is a mandatory requirement for all company under the Companies Act 2013. This is incorrect. This statement is not true because that before 2015, common seal was mandatory. It was mandatory before 2015. But that Companies Amendment Act 2015 made the common seal optional for the company. Now it is optional. For example, some company may choose to have a common seal for executing official document, but it is no longer compulsion. Option B says that Article of Association may specify the condition under which a common seal could be affixed and a person authorized to do so. AOA is called Article of Association, is a document that outlines the internal rules and regulation of a company. It specifies when and how common seal should be used and who is the authorized to affix it. So this is point number B. Point number C says that MOA. MOA, it's called Memorandum of Association. MOA is called Memorandum of Association. So MOA does not typically provide provision about the common seal. So this statement is true. MOA outline the company main objective, power, and scope of the operation. It does not usually contain provision about the use of the common seal. So MOA would focus on what the company is set up to do, like selling goods or providing service, but it would not mention how to use their company. And option D says the common seal is used to execute document on the behalf of the company. So this statement is true because common seal is traditionally used to execute document and so that company official agree with the terms of the document. It serves as a company's signature on legal contract and other important paper. So the correct answer is option number A. So let me again summarize the fact which we have learned just now, that common seal is optional for company, right? Under the company's amendment at 2015, the AOA can specify how and when the seal should be used. The MOE does not mention the common seal, and the common seal is used to execute legal document on the behalf of the company. I hope this make your concept clear, right? Now let's see one more question. So one more question is regarding the BEIS, which is the back end interest subsidy scheme for MSME in Tamil Nadu, for MSE in Tamil Nadu. Which statement is not correct? Which is incorrect? Basically the question is which is incorrect, right? So let's see. Let's see the correct options. First of all, first option says that the BEIS provide a 5% interest subsidy on term loan for a period of 5 years. What do you think? Yes, this is true because this BEIS, or we can call it back end interest subsidy scheme. So this BEIS scheme offer a 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on a loan for a period of 5 years. This help ease the financial burden on a small business by reducing their loan repayment amount. Let me give you an example. Let's say a small business takes a loan of 10 lakh. Right, 10 lakh a business loan is taken by a small business. So if they qualify for the subsidy, they will only pay 5% less in interest for the next 5 years. So again I am repeating that BEIS scheme offer 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on loan for a period of 5 years. Right. Let's see the option number B. So which statement is not true it is asked, right? Option A1 is correct. Now option B, let's see. Option B says that a maximum subsidy amount is 20 lakh for loan up to 2 crore and obtained under the CGT MSE. So CGT MSE. So the maximum subsidy, yes, this is also correct. The maximum subsidy under BEIS scheme is 20 lakh, which is applicable to loan that are up to 2 crore. And the loan must also be obtained through the CGT MSE, right? CGT MSE design. For example, suppose if a business take a loan of 1 crore under the CGT MSE, they could get 5 lakh subsidy, 5%, right? For larger loan, they could get up to 20 lakh as a maximum subsidy. Now the next option is that BEIS is exclusively available for new micro and small manufacturing enterprise. So this is also true. This BEIS scheme is only available for the new micro and small enterprise, and it specifically target the manufacturing business. This means that only manufacturing business which are starting or are new can apply for this subsidy. Option D is incorrect because this is the correct answer here, because BEIS is applicable to all micro and small enterprise service business. This is wrong. Because BEIS is not applicable to service based business. Here it is written service based business, and you should know that BEIS does not apply to the service based business.
Question is, where is the headquarter of NEI's BOD located? First option say Mumbai. Mumbai is a financial capital of India, right? So it is home to major institutions like RBI, CAIIB, BSE. But any NIE's BOD is not a headquarter, right? Then Hyderabad. This is also incorrect. This Hyderabad, it is a famous IT and pharma hub, like Google, Microsoft, TCS. So these are placed in Hyderabad, but NIS BOD is not there. Noida is the correct answer. So the headquarter of NIS BOD is in Noida. It is an apex body under the Ministry of Skill. You must know it is under the Ministry of Skill Development and Entrepreneurship. It is MSD. We call it MSD, Ministry of Skill Development and Entrepreneurship, right? That promotes entrepreneurship and skill development. Kolkata is also incorrect answer. So you must understand that the moral of this question is that NIS BOD headquartered is Noida or on Uttar Pradesh, and it works under Ministry of Skill Development and Entrepreneurship. It focuses on entrepreneurship and skill training, right?
So that is the correct answer. Option number C is the correct answer. Now the second question is camel is used for evaluating the performance of, right? You might have heard about this camel. This is an acronym, right? So friends, option A suggests mutual fund, option B bank and financial institution, stock market, insurance company. So please, do you know what is the correct answer? Option A, mutual fund. You know, mutual fund pool money from investor to invest in a stock, bond and other asset. So they are evaluated based on returns, expense ratio and risk factor. This is not the correct answer. The correct answer to this question is, you know, bank and financial institution. Yes, the camel rating system is used to evaluate banks and financial institution. So sometimes, you know, question may be asked regarding full form. You must know the full form of camels. What does C stand for? Do you know what does C stand for? C stand for capital adequacy. Let me write down the important point. So C stand for, you know, C stand for capital adequacy. What is the meaning of capital adequacy? Means does the bank have enough capital to handle the risk? This is called capital adequacy. What about A? A stand for asset quality. A stand for asset quality. What is the meaning of asset quality? See, are the bank loan and investment safe? That is called asset quality. M stand for, you know, management efficiency. M stand for management efficiency, which means is the bank leadership good? Then E stand for, you know, E stand for earning. What is the meaning of earning? That is the bank profitable. And this L stand for liquidity. Liquidity, you know it very well, that does the bank have enough cash to meet obligation? So just like doctor check your health using blood test, camel rating check a bank financial health. C for capital adequacy, A for asset quality, M for management efficiency, E for earning and L for liquidity. So you must remember this formula, this full form, very very important. If we talk about option number C, that is stock market indices, this is incorrect. You know some indices like Sensex, Nifty, and so they track the performance of group of stock, right? These are tracked by indices. So the performance depends on factor like market trend, investor sentiment, economic condition, not the camel system. An insurance company, you know, they are evaluated. Their insurance company are evaluated using solvency factors, solvency ratios, claim settlement ratios, and IRDAI norms. So the final summary is that camel rating system is used for bank and financial institution. 5 key components are there: capital adequacy, asset quality, management, earning, liquidity. Right? That is the point. Now let's see the next question. Question number 3 is on your screen. As you can see, it says that the 5C are primarily used in which area of banking? Yes, you must be aware of this 5C, right? So they are used in which area of the banking, right? Option A, risk management. What do you think? You know, risk management in bank focus on identifying, analyzing and reducing the risk. What we do in risk management, you know, in risk management part, what we do, we first identify, then we analyze, and then what we do, we reduce the risk, right? Like market, credit, operational risk. So while credit risk is a part of risk management, the 5C are specifically used in credit appraisal. So just like doctor checks your medical history before giving medicine, a bank check a borrower credit worthiness before granting loan. But this is a part of credit appraisal, not overall risk management. So this is wrong. Option number B say credit appraisal. This is the correct answer. So you know, these 5 C's of credit are used in credit appraisal, where bank assess whether a borrower is eligible for a loan. So let us simplify what are these 5C. The first C, you know, is character. The first C, you know, is character. What is the meaning of character? That means when I say character, it means the borrower past credit history and repayment behavior. The second C, you know, is about capacity. Capacity, what does it capacity means? Means the borrower ability to repay the loan based on income and existing debt. The third C, you know, is about capital. What is the meaning of capital? Like the financial strength of the borrower, including their own investment in the business or project. The fourth C, you know, is collateral. Collateral, you know it very well, that asset placed as security for the loan, like property, gold or fixed deposits. And the last C is about condition. So economic and market condition affecting the borrower ability to repay, right? So let me give you an example to make it more clear. Imagine a bank giving a home loan. So they will check your salary. So your salary, you know, first of all they will check your salary, right? So your salary is like your character, right? So character means salary means your capacity, not character. Just wait a minute. Let me write down in correct place. So you know, salary is just like your capacity, right? Salary is your capacity, right? Then you know, they will also check your credit score. So credit score, so what is credit score? Credit score is like your character. Your score is like your character. Also, you know, your saving they will check. So they saving your like your capital, right? So they will also check, they will also place your house as security. So that is your, this house your collateral. And the real estate market will also check, that is called condition, before approving the loan. Option number C, CRM. This is wrong. You know that CRM is about managing relationship with the customer to improve service and business growth. It focuses on customer feedback, complaints and engagement, not loan approval. For example, if you visit a bank for a loan, the CRM system helps track your queries, but the loan approval depends on 5 C's of the credit. Option D says treasury operation. This is wrong because treasury operation in the bank manage cash flow, investment, foreign exchange and liquidity. Treasury operation handle how much cash a bank has for lending, but who gets the loan is decided through credit appraisal using 5C. So what we learned from the discussion is that 5C of credit are used in credit appraisal to assess loan eligibility. 5C means character, capacity, capital, collateral and condition. It is not related to risk management, customer relationship management or treasury operation. I hope this makes sense to you. Now let's switch our focus to our next question, which were asked on 8 March examination. The question, as you can see, if an individual CIBIL score is 750, what is the associate risk category? So before going into this question, let me tell you that if you are looking for MSME study material, we have a fully fledged course on MSME, from where students have cleared the examination, which have recently been held. Right, in this course you get unit-wise theory PDF, unit-wise MCQs PDF, as well as previous year question, right, which provide you sufficient knowledge to equip you to the with the knowledge so that you can easily crack the examination. So if you want to get detail regarding it, you can WhatsApp me on this particular number, right, 82857381, to get more detail regarding the course, right. So the link of the course is also provided in the description section of this particular video. Now let's come back to this question. So friends, this question is about a CIBIL score and risk category. So option number is suggests high risk. So if we talk about the high risk borrower, a high risk borrower is someone with a poor credit history, meaning they will have defaulted on loan, or they will have very low CIBIL score, especially below 650. So bank hesitate to give loan to such individual. For example, imagine you have a friend who always borrow money but never repays on time. Would you lend them money again? Of course not. That is exactly how banks see high risk borrower. So a CIBIL score of 750 is not considered high risk. So option is wrong. Normal risk. Yes, this is correct. So CIBIL score of 750 falls under normal risk category. People in this range have a decent credit history, meaning, so let me write down, this is the key point, they have a decent credit history. It means that they pay their EMI, they bill on time, bank feel comfortable giving them loan, right. So you must know that if the credit history, if the CIBIL score is in this range, 300 to 649, it means high risk is there, risk is quite high. And if it fall in 650 to 749, so this is basically normal risk. This is basically, we can call it normal risk. And if it is 750 plus, it means that low risk, right. So for example, if you have CIBIL score of 750, it's like being a responsible student who will submit homework on time. Your teacher, that is your bank, trusts you more than and gives you more better opportunity. Option number C is a low risk. Yeah, this is wrong, because typically have a CIBIL score above 800. These people have excellent credit history and get the best loan offer with lower interest rate. And very high risk, this is also incorrect. Why? Because the very high risk borrower have a CIBIL score below 500, and these individuals have frequent default, missed EMI or loan settled with bank instead of full repayment, right. So if a student never submit assignment and fail at test, teacher won't trust them with responsibility. Similarly, bank don't trust borrower with very low credit score. So the final summary from this discussion is that CIBIL score is a measure of credit worthiness ranging from 300 to 900, right. 750 plus is a good score and fall under the normal risk category. High risk below 650, normal risk 650 to 750, 749 to be more precise. Now the next question is, which of the following is a primary role of KVIC? Very important question. What is KVIC? Khadi Village and Industries Commission. So what is the important role of KVIC? So this question is regarding KVIC. Option number A, promoting large scale industrialization, generating rural employment through khadi and village industry, obviously regulating foreign trade policy, and obviously B number option is correct, because KVIC, which was established under the Khadi and Village Industry Commission Act 1956, is a statutory body focusing on promoting and developing khadi and village industry to create employment opportunity in rural India, right, strengthening the rural economy, preventing migration to urban area, and supporting decentralized economic development through skill development, technology transfer, R&D, and marketing initiative. Very easy. Now this is very important question. This question is regarding to PMEGP, Prime Minister Employment Generation Program. Who is eligible to apply for financial assistance under PMEGP? Very important question, that who can apply for financial assistance under PMEGP. So friends, PMEGP, Prime Minister Employment Generation Program. So option number A, an individual above 18 year of age with at least at least 8 standard pass for manufacturing project above 10 lakh and business service project above 5 lakh. So PMEGP is a government scheme that provide financial assistance. So when I say this financial assistance, what I mean to say is that it provide you subsidy and it provide you loan. Two things it provide, subsidy plus loan, right? Who can apply? Any individual above 18 year of age. If the project cost is above rupees 10 lakh for manufacturing or above 5 lakh for services, right? The applicant must have at least 8 standard pass, right? And there are some other eligible group also, right? SHG is also there, production based cooperative are also there, and charitable trust are also there. Let me give you an example. Imagine a person named as Raj. Want to start a furniture making unit costing rupees 12 lakh. He want to start a furniture making unit which costs rupees 12 lakh. Since this manufacturing project is above 10 lakh, he must have at least 8th grade education to qualify for this. That means option number A is correct. Option number B suggests only SHG and cooperative society. See, SHG, self-help group, society and cooperative can apply. They are not the only eligible entity. For example, if Ramesh as an individual want to start a grocery store, he can apply alone without being in SHG or cooperative society. Since PMEGP is not limited to just SHG and cooperative, that's why this option is incorrect. Option number C suggests existing unit under PMRY, REGP or any other government scheme. So PMEGP only fund new business, new product, new project are allowed. Existing units that have already received benefit under PMRI, what is the meaning of PMRY? That is Prime Minister Rural, it is a Prime Minister Rozgar Yojana. REGP, what is REGP? Rural Employment Generation Program. So existing unit that have already received benefit under this program, they cannot apply again. For example, if Suresh already received a subsidy for his small textile business under PMRY, he cannot apply for another subsidy under PMEGP. Option number D, any unit that has already availed a government subsidy under any other scheme. This is also incorrect because if someone has already taken a subsidy under another government scheme, they cannot apply for PMEGP. For example, if a company got rupees 5 lakh subsidy under Stand Up India, it cannot apply for another subsidy under PMEGP. So what we learned from this discussion is that PMEGP provide financial assistance for new business. Individual above 18 years can apply. For large project, 8 standard pass is required. Self-help group, cooperative, charitable trust also eligible. Existing unit that have already received subsidy under other government scheme, they are not eligible, right? That is why fully fledged understanding is very much required. That's why I explain each and every option, so that you must understand what are the pros, what are the eligibility. Remember, this eligibility is very important. You can see eligibility written here, right? Now, what is the minimum and maximum number of partner required in LLP? This is another good question based on which we are asked. What is LLP? Limited liability partnership. Option number A, minimum 2 partner, maximum no partner. Yes, correct. So what is the act? What is the act name? This is called LLP Act 2008. So it says that every LLP must have at least 2 partner. There is no maximum limit on the number of partner. There must be at least 2 DP. What is the meaning of DP? DP means designated partner, and at least one must be resident of India. Let me give you an example. Suppose 2 friends are there. One is Amit and other is Raj. So these 2 friends, want to start an IT consulting firm together. So they can register as an LLP with just 2 partner. Later they can add more partner without any upper limit. That is why option A is the correct answer. What about B? 3 and 50. This is wrong because LLP require minimum of 2 partner, not 3, and there is also no maximum limit on LLP. So if only 2 people want to start an LLP, they can legally do so. The law does not require 3 partner. Minimum 2, maximum 200. This is also wrong because a private limited has maximum limit of 200 shareholder, but an LLP does not have such restrictions. So you must know, if it has been private limited, then this option would have been correct. But since it is LLP, they have no limit on maximum number. 5 and 500. This is also incorrect, right? So what we learned from this discussion is that LLP requires a minimum of 2 members or 2 partners to be registered. Remember it. So it should have at least 2 partners, right? And that there is no maximum limit. There is no maximum limit on the number of partner in an LLP. At least 2 partner must be designated partner, DP, we call it DP, right? And one must be resident of India. This is another condition. One must be resident of India. You must note it down, right? And LLP are different from private limited company, which have maximum limit of 200 shareholder. Private limited company, they have a restriction of 200 shareholder max. That's it. So we can see we have learned 4 concepts from this particular question. That is the beauty of this learning, right? We don't only learn what is asked, we learn something different which may help you in upcoming examination. Now the upcoming question is, what is the full form of NIES-BUD? I told you about NIES-BUD in the first question. Remember it? Now its full form. So friends, option A, it suggests National Institute of Employment and Skill-Based Development. This is wrong. Right. Option B says that National Institute of Entrepreneurship and Small Business Development. Yes, it is correct. Very good. It is correct. Option number B is the correct. So let me talk you something about this NIES-BUD. You know, I told you it is under MSDE. MSDE, you know, Ministry of Skill Development and Entrepreneurship, Government of India. Its headquarters is in Noida, Uttar Pradesh. It plays a major role in training and promoting entrepreneurship and small businesses. It provides workshop, training program, a skill development initiative. Let me give you an example. Imagine you want to start a small business. Suppose that you want to start a small business, right? But you don't know how to get funding, market your product, or manage account. So NIES-BUD provide you training program to help you learn all these skills, right? Option number A is wrong, right? So option number C is also, so option number B is the correct. I hope we don't require explanation of all the option, because only one option is correct, which is entrepreneurship. Now let's switch our focus to the next question. Very good question. Which of the following is not a component of new MSME champion scheme? Very, very important question. You know about this new MSME champion scheme? MSME sustainable, JDD, MSME innovative, MSME competitive, MSME export promotion scheme. Correct answer is MSME export promotion scheme. So you must remember that this champion scheme consists of three main components. When we first component is MSME sustainable, JDD. What is JDD? Zero defect practices to promote sustainable and environmentally friendly manufacturing. This is called zero defect practice. The second part, you know, is called MSME innovative. What is innovative stand for? Incubation, right? It support incubation, intellectual property right, designed to encourage innovation in MSME. And the third is competitive. It aims at improving efficiency, competitiveness through lean manufacturing technique. So you must understand these three parts of this champion scheme, right? So this promotion scheme is not a part of champion scheme. Now the next question is under the TAIIB. TAIIB means technology and quality upgradation. What is the maximum financial support provided by Government of India for implementing EET, that is energy efficient technology? Very important question. This was asked in March 3rd examination, March 8th examination. So friends, how much financial support does the Government of India provide under this scheme? So friends, option number A suggests 50% of the project cost up to 20 lakh. This option overestimates the government financial support. The scheme does not provide that much, right? Option B, 25% of the project cost up to 10 lakh. Yes, this is correct. So first of all, you must know that TAIIB scheme is a part of National Manufacturing Competitiveness Program, which is called NMCP. What is NMCP? National Manufacturing Competitiveness Program, right? It aims to help MSME adopt energy efficient technology, that is called EET, right? EET, to improve their production process, and the government provide 25% of the project cost with a maximum cap of 10 lakh per project, right? The project must show at least 15% energy saving to qualify for funding. The project must show at least 15% energy saving. For example, suppose a small factory want to replace old machine with an energy efficient one costing rupees 40 lakh. So a small factory want to replace old machine with energy efficient one costing 40 lakh. Under this scheme, 25%. What will be the 25% of 40 lakh? Please let me know in the comment section. So 25% of 40 lakh means 1/4 of 40 lakh, which is nothing but 10 lakh. So the 10 lakh is the maximum support which allow. Means the government will allow, provide 10 lakh, and the business owner will arrange the rest. That's why option number B is correct, right? Up to 10 lakh. Option number A suggests 50% of the project cost up to 20 lakh. This is incorrect. For example, if MSME apply for 20 lakh in funding, the government will only approve 10 lakh, not more. Option C, 100% of the project cost. This is also incorrect. So if a business want to install solar panel costing rupees 4 lakh, the government will only contribute 25%, that is 1 lakh, not 4 lakh, and no financial support. This is also incorrect, right? This is completely wrong, because the government does provide funding under TAIIB. If MSME has to bear the entire cost of upgrading machine, many small business would not afford it. That is why government steps in. So what we learn from this question, let's summarize finally. So let me give you the summarization here. You know, this TAIIB scheme is a part of NMCP. What is NMCP? National Manufacturing Competitiveness Program. First point. Second point, it helps MSME adopt EET, that is energy efficient technology. Second point. Third point, that it government provide 25% of the project cost up to rupees 10 lakh. Fourth point, the project must show at least 15% as per the DPR, as per the detailed project report, right? I hope that makes sense to you. Please hit the like button if you really think that till now your concept is clear, because it takes lots of effort to gather all this information, to collect the information from the students who have given the examination and provide you input. Now let's see the next question. Under which legal framework are SSIDC typically registered? You know what is SSIDC? SSIDC stands for State Small Industrial Development Corporation, right? Option A, Companies Act 1956. Very good, that's the correct answer, right? You know, SSIDC are government owned corporation. First thing first, they are government owned corporation, right? They are set up by state government. Who set them? They are set up by the state government. Why is state government set them? To support and promote small industry, right? To promote a small industry, right? They are typically registered under the Companies Act 1956, which provide them with proper corporate structure. So this helps them function as organized corporate entity. The main activity includes, you know, providing land, providing machinery, providing raw material. To whom? To a small industry, right? It helps MSME with financial aid. For example, suppose a state government want to help businesses in its region. So instead of setting up multiple small agency, it register SSIDC under the Companies Act. This make it a structured organization with a clear objective and rule. Option number B, Indian Partnership Act. This is incorrect, because you know SSIDC are not partnership, they are government owned corporation. For example, a small textile shop run by two partners under a verbal agreement come under the Partnership Act, but a state industrial corporation need a strong legal structure. That is why it is registered under Companies Act. Option C, Limited Liability Partnership. This is also incorrect. You know, LLP are privately formed business, while SSIDC are government owned organization. So if two professionals like CA firms or law firms want to start a business together with limiting their liability, they can register under the LLP Act. And what about the Cooperative Society Act? This is also incorrect. You know that in this act, member pool resources for mutual benefit. So SSIDC are not cooperative. So what is the final summary? What we learned from this discussion is that, let's summarize the fact. So this is the learning. So SSIDC is a government run organization that promote a small industry. They are registered under Companies Act, right? The correct answer is option number A. That's it. Now let's look at the next question. This question is regarding TUF, that is Technology Upgradation Fund, is primarily implemented in which sector? So I will tell you every information about this TUF, Technology Upgradation Fund. So option number A, textile. Yes, very good. It is T for textile, T for TUF. This way you can remember. You know, it is a government TUF. You know, it is a government scheme. First thing first, it is a government scheme, right? It is a government scheme that modernize the textile sector. It provides financial assistance for upgrading machinery, for adopting energy efficient technology and improving productivity. And you know, Ministry of Textile, right? Ministry of Textile launched this scheme to help Indian textile industry compete in the global market. For example, imagine a small textile factory. For example, you can imagine a small textile factory, right? Using old weaving machine. So with TUF support, the factory owner can buy modern automated tools, looms at a lower cost. This increase production speed and quality, helping business grow. Option B, food processing. This is incorrect. Food processing, you know, there are some scheme like PM Kisan Sampada Yojana, Mega Food Park scheme. So TUF is not related to food processing. Automotive, this is also wrong. There is some scheme called FAME scheme. You might have heard about this FAME scheme. What is FAME scheme? That is faster adoption and manufacturing of electric vehicle, right? So a company making electric car will get benefit under FAME scheme, not TUF. And for IT, there is something scheme called STPI. STPI, you know, Software Technology Park of India, right? So the final answer is, you know, final answer is textile. T for textile, T for Technology Upgradation Fund. This way you can remember it. Now, what does UNIDO stand for? So its full form is United Nations Industrial Development Organization. I am skipping this question because it's very easy. Let's look at the next question. Very, very important. Which of the following best describe the purpose of asset turnover ratio? Right, asset turnover ratio. So the question is, what does this ratio tells us and why is it important for businesses? So option number A suggests that it measures a company debt relative to the asset. You know, this describe the debt to asset ratio. So option number A describe, you know, debt to asset ratio. It describe debt to asset ratio, right? The debt to asset ratio tells us how much of a company asset are financed through debt. Let me give you an example to make it more clear. For example, if a company has 1 crore in total asset, and rupees 50 lakh in debt, so the DA ratio will be 50%. So this does not measure efficiency in generating revenue. So option A is incorrect. Option B suggests it indicates how efficiently a company uses its asset to generate revenue. Yes, this is the correct answer. This is what is the purpose of asset turnover ratio. So this asset turnover ratio, it tells us how efficiently a company is using its asset. So suppose this is the company, it is using its asset to generate revenue. So the formula of asset turnover ratio is net sale upon average total asset. Net sale upon average total asset. So higher ratio means the company is using asset efficiently to generate the sale, and lower ratio may indicate underutilization of asset. For example, let me give you an example to make it more clear. Suppose there are two shops selling mobile phone. This is shop A, this is shop B. So shop A has asset worth rupees 10 lakh, and shop B also has asset worth rupees 10 lakh. But shop A generate 20 lakh rupees in sales, and shop B generate only 8 lakh in sale. So shop A has higher asset turnover ratio, meaning it is using its asset more efficiently as compared to shop B. That is why option B is correct. Option C, it reflects the company profitability by comparing net income to total asset. Option number C. See, this is called ROA. When I say ROA, return on asset, it is nothing but net income, that is called net profit, upon total asset. This is called ROA. This is not called asset turnover ratio. So this tells us how much profit a company earns per rupee of asset. For example, if suppose a company has 10 crore in asset, and suppose it earn rupees 1 crore in net profit. So what will be its ROA? It will be 1 crore upon 10, or we can say 10%. I am again repeating. Suppose 10 crore a company has it in form of asset, and it earned 1 crore revenue, right? 1 crore net profit. So its ROA will be 10%. So option C suggests about ROA, that is return on asset. So this is also incorrect. Option D suggests it assesses the liquidity of company by comparing current asset to current liability. So this is called current ratio. This is called current ratio, which is CA upon CL, current asset upon current liability. For example, if a company has 5 lakh in suppose current asset and 2.5 lakh in suppose current liability, right? So its current ratio will be how much? Its current ratio will be 2, which means it has twice the asset needed to cover short-term debt. So this measures liquidity, not efficiency. So option D is incorrect. So what we learned from this discussion is that we have learned regarding the asset turnover ratio, right? So asset turnover ratio, the formula for asset turnover ratio is sales in the numerator upon average total asset in the denominator, right? It shows how efficiently a company use asset to generate revenue. And if this ratio is higher, it simply means that it means that better efficiency, lower ratio means underutilization. So if this asset turnover ratio is higher, it simplifies that company is using its asset more effectively, and if this ratio is lower, it means underutilization of asset, right? So it is not related to debt, it is not related to profit, it is not related to liquidity. So friends, if you want to make more such videos, make the part 2 of this particular video, that is raised question, please write yes in the comment section. I will come to know that yes, you are interested in such kind of content where every concept, I don't only tell you the correct option, I explain each and every option using example possible, so that you have conceptual understanding. Our main focus is conceptual understanding. You should know what is the meaning of asset turnover ratio. You should know what is the meaning of this so-called current ratio. You should know what is the meaning of this so-called ROA, return on asset. Every aspect we touch upon. If you want me to make the part 2 of this video, please write yes in the comment section. And I request you, if you want a study material, feel free to WhatsApp me on this particular number to get more detail regarding the study material. Thank you for listening to this lesson. Hope it will help you in your upcoming examination. All the best for examination. Thank you.
When with eligibility requiring individual above 18 years. Option B says that PMEGP provide only loan with no subsidies and focus solely on agriculture employment generation. Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under other government scheme. Option D says that PMEG offer a flat 10% subsidy for project costing below 5 lakh regardless of the location or category. So these are the 4 options given here. Let's start with the option number 1. So let's look at option number 1. Option number 1 is correct. Yes, this one is correct. Why? Because PMEGP was created by combining 2 schemes, right? So there was first scheme was called PMRY. Okay, this PMRY was merged with, this is called Prime Minister Rozgar Yojana. It was merged with REGP, which we call Rural Employment Generation Program. And then after merging, this PMEGP is evolved. Okay, the idea is simple, to help the people. What was the idea? To help the people, right? and they start their own small business and micro enterprise, right? So this is the point. And who implemented? KVIC implemented, which is the Khadi and Village Industry Commission, with support from, so they get support from state office, right? They also get support from banks. Now eligibility, I told you, you should be above 18 years of age, minimum 18 years, right? I mean 18 years of age, and should have minimum education required. So for example, suppose there is a 20, let me give you one example. Suppose there is a 20-year-old student, right? 20-year-old student with basic schooling. Now he want to open a tailoring unit, right? He want to open a tailoring unit, or he want to open a small service business, so they can apply under PMEGP. So these are the keyword point you must keep in the mind. Let's look at option number B. Option number B says that it provides only loan with no subsidy. That is wrong. You know, PMEGP is not about agriculture. It's related solely, no, this is wrong. It is not about agriculture. It's about, you know, non-farm micro enterprise. Let me write it down. Right. It about, you know, non-farm micro enterprise. Non-farm micro enterprise. Right, like a small shop, workshop, or service unit. And you know, it provides both loan and subsidy. Subsidy can range from 15% to 35% depending on the location and category of the beneficiary. So this option number B is completely misleading. What about C? Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under the other government scheme. So this is again wrong. Why? Because existing enterprise that already got subsidy from other government scheme, they are not eligible. PMEGP is only for, remember, it is only for new project. See, I'm writing these things are very, very important. Remember, this is only for new project. Okay. For example, if someone already took a subsidy under Mudra Yojana, they cannot come again and claim under PMEGP for the same unit. Right? What about option D? Option D says that it offers a flat 10% subsidy for project costing below 5 lakh regardless of location or category. So this is also wrong. You know, subsidy is not flat 10%. It changes depending on whether the person is from general category or from a special category like SC, ST, women, differentially able. So subsidy can range from 15% to 35%. Right. So let's take the quick summary of what we have discussed here. So this is all about, you know, PMEGP. So it is a merger of two schemes, PMRY and REGP. First point. Second point is, you know, that focus is to create self-employment. That is the focus. What is the focus? Focus is for creating the self-employment. Then I told you it is implemented by KVIC plus bank. Eligibility is more than equal to 18 years, right? Plus minimum education. Project limit is 25 lakh. This question is also asked. What is the limit? 25 lakh manufacturing and 10 lakh for services. This limit is also been asked. Remember, project limit is 25 lakh for manufacturing and 10 lakh for services, and subsidy range from 15 to 35%. This range depending on the location and category, and existing unit with subsidy not eligible for it. So friend, always remember this point, that you know, PMEGP is for new small businesses, right? It is for new small businesses in non-farm area, helping youth and artisan to become self-employed. That is what PMEGP is all about. Everything has been written here, and I have summarized all the things. If you think that this content is useful for your preparation, please hit the like button. This will motivate me to make more such as content. Also, you can share the content with your colleague who are preparing for this examination. It will be quite beneficial for them also. For your information, let me tell you that if you want to prepare, if you want to practice some quizzes based on MSME, you can join our Telegram channel. In the description section of the video, you will get the Telegram channel. You can join the Telegram and attempt many quizzes which are completely free of cost. Now friends, let's look at the next question. So what was the primary objective of the Pradhan Mantri Task Force? Yeah, this is a very good question. Pradhan Mantri Task Force constituted for the MSME sector development. What was the primary objective? Option A, to promote export of MSME product through international marketing agency. Option B, to reflect on issues raised by MSME association and formulate a comprehensive agenda for action. Option C, to develop policies solely focused on labor law reform in the MSME sector. Option D, to provide direct financing assistance to MSME without any structural reform. Very good question it is. So let's discuss this particular question. Let's look at option number A. So if you look at option number A, this is too much narrow. Export are important, but the task force was not made just for export. It has a much bigger agenda. The agenda was much bigger. Not only marketing, but also credit, labor, infrastructure, skill development. So export was only one small part, not the full object. Option number B, yes, this one is the correct one. because the task force was formed after the prime minister met with the, see what happened, let me tell you the history also. Basically our prime minister, they met with the MSME association, right? They met with the MSME association who highlighted many problem where that credit where was not available, marketing, marketing channel was weak, labor law was complicated, and infrastructure better was needed, infrastructure better was required, skill development was one reason, right? So even a smoother exit policy for field business. So the task force divided this topic into group, right? What the task force did, these are the topics, right? And they divided this topic into group, okay, and worked on recommendation for each group. They work on recommendation. For example, imagine that there is a small textile unit in a town. It has struggled with the loan approval, faces tough competition in the marketing, and lack a skilled worker. So the task force wanted to fix all these problems together, not just one. That's why they group it, and then they work on the recommendation. Now option number C says that to develop policies solely focused on labor law. It is again wrong. Labor law reform was just one part. Yes, this was one part of this. If the task force only focus on labor, it would miss bigger issues like credit and infrastructure. Option D says that to provide direct financing assistance to MSME without any structural reform. This is also incorrect. Why? Because the task force did not give out money directly. Instead, its job was to study the problem. First of all, they would study the problem. After studying the problem, they will recommend the changes. So the correct answer to this question is option number B. So let's quickly summarize the keyword which we have discussed regarding the task force. So task force was created after the PM meet MSME. First point I told you, PM and meet MSME association, then task force was created. The goal was to solve the multiple issue together. It was divided into subgroup, right? This task force was divided into subgroup like credit, marketing, labor, infrastructure, right? Exit policy, skill development, and it was divided into subgroup for focus solution. Recommended setting up PM Council on MSME. So it set up PM Council on MSME. Right, it was set up, right, to monitor the progress. So friend, remember the Pradhan Mantri task force for MSME was all about 360-degree solution. It was all about 360-degree solution for small businesses, not just one area. I hope this clear your confusion. Now friends, let's look at the next question that we have. The next question that we have is as you can see on the screen. So it says that what is the full form of CGTMSE and what is its primary objective? Very good question it is. CGTMSE full form and the primary objective is being asked in this question. So options are credit guarantee trade management service for enterprise to provide marketing support to SME. B, credit guarantee fund trust for micro small enterprise to provide credit guarantee to financial institution for loan extended to MSME. C, credit goods and trade management services for entrepreneur to provide subsidy on trade loan. D, commercial guarantee trust for micro and small entity to finance large scale industry with collateral security. I hope you know the answer very well, right? So the option number A is wrong. First of all, the full form itself is incorrect. CGTMSE does not stand for trade management service. No, this is wrong. Second thing is that it talk about marketing support. See, CGTMSE is not about marketing. It's about loan guarantee. CGTMSE is about loan guarantee. Like marketing support is given by other government scheme, but CGTMSE focuses only on finance. Yes, B number is correct. This is the correct definition. Credit guarantee fund trust for micro and small enterprise. Remember the full form. Sometimes question will be asked that what does E stand for? What does T stand for? So you should know the complete full form. And if you talk about the CGTMSE, let me elaborate a little bit about it. So you must know that CGTMSE, it was set up by MSME Ministry plus CAIIB. Remember, CAIIB is also involved in setting up the CGTMSE. What was the purpose? The purpose was to help the small business get loan without collateral. How? So bank normally ask for property or other asset as security. Many small entrepreneurs don't have that, right? Because bank, whenever these small businesses go to bank for loan, bank asks for something as collateral, and normal business don't have that. So CGTMSE give a guarantee to the bank so that even if the borrower fail, the bank is protected. This makes bank more confident in giving the loan. Let me give you one example to make it more clear. For example, let's suppose there is a young entrepreneur and he wanted a 10 lakh rupees loan, right, to start a repair workshop. he want to start a repair workshop for which he need 10 lakh rupees note. But he has no land, he has no property to mortgage. With CGT MSE, the bank can still give him the loan because the scheme guaranteed it. I hope it is clear. Now, let's look at option number C. Credit Goods and Trade Management Scheme, completely wrong. And CGT MSE does not provide subsidy. Here it is just subsidy. No. It has nothing to do with subsidy. It is a kind of credit guarantee. Option number D is also wrong. Right. Large scale industry are not covered here. Remember, large scale industry, they are not covered here. And it is meant for collateral free loan. So the correct option is option number B. So what we learn from this question is that, full form, first of all, full form is clear. Credit Guarantee Fund Trust for Micro and Small Enterprise. Second thing is that who set up? MSME and CAIIB. Both of them combinedly set up. The purpose is to help the MSE, not your large enterprise. The purpose is only to help the MSE, micro and small enterprise, to get loan without collateral or third party guarantee. How it work? It work by giving bank a guarantee cover. And it apply to manufacturing and it apply to the services. Right? Remember it. And it is not about marketing and not about subsidy, not for larger industry. So friends, always remember, CGT MSE is like a safety net for the bank so that a small business can get loan easily without pledging the property. Friends, if you are looking for a study material for this MSME examination, you can WhatsApp me on this particular number because we have almost 5 to 6 previous year memory question based PDF available in the course. Also, we provide you 2000 plus MCQs for practice purpose. Along with that, module wise quick notes, unit wise quick notes, which will immediately help you in your upcoming examination. And many people have qualified the examination using our material in their first attempt itself. If you want also to qualify using, increase your efficiency, having net low input and maximum output, then you can check out the course. The course link is provided in the description section of the video. I hope every aspect about CGT MSE is clear. Now let's see the next question that we have. Yes, very good question. This question asks you the definition of the angel investor. So question is regarding that as per the SEBI Alternative Investment Fund, we call it AIF. As per the SEBI AIF Regulation 2012, which one of the following correctly describe an angel investor? So this question is regarding the angel investor, right? Option number A says that individual with a net tangible asset of at least 2 crore, excluding principal capital residence, or is a senior management professional with at least 10 years of experience, or a buddy corporate with net worth of at least 10 crore. Option number B says that any individual willing to invest less than 25 lakh in a startup without an asset or experience criteria. Option C, only venture capital fund with asset over 10 crore investing in large stage venture. And option D says that individual investor with net worth over 50 lakh irrespective of the investment experience. So if you look at the option number A, the question is asking about angel investor. Yes, option number A is the correct one. This one is the correct one. Right. So remember some criteria. Let me explain. So this is the correct definition. First of all, and if you talk about the angel investor, so you must know that he is an individual. Right. He is an individual. He must have asset worth at least 2 crore, not counting their home. Plus, they should have an experience. They require experience. Experience like invest. They must have invested in a startup before. Right, starting multiple business. They must have experience of starting the multiple business. Right, serial entrepreneur we call it. Or they must be in the senior management role. They must be in the senior management role for at least 10 years. If either of these, then they are called what is the term that we are talking about here? Angel investor. Okay. Now, third thing is that buddy corporate. Yes. If you talk about the buddy corporate, so that company with, so if for individual, this is the criteria. For buddy corporate, which have at least 10 crore net worth, can also be angel investor. Now let's talk about the funds. Even AIF, Alternative Investment Fund, or VCF. It is called Venture Capitalist Fund, registered with SEBI. They also qualify. So see, individual, in context of individual we have discussed, in context of buddy corporate we have discussed, in context of fund we have discussed. So let me give you one example to make it more clear. Suppose there is a retired CEO. Take the case of retired CEO of a particular company. Right, he has 5 crore worth of asset and 20 years of management experience. So he can act like an angel investor. Similarly, a company with 15 crore net worth can also invest. So I hope the definition is crystal clear. Now the option number B says that individual willing to invest less than 25 lakh. This is completely wrong. Right. SEBI rule is that minimum investment is 25 lakh, not less than that. Right. This is the minimum investment, 25 lakh, not less than that. Option number C says that only venture capital fund with asset over 10 crore. No. Angel investors are known for funding early stage startup. Remember, they fund early stage startup. Right. And it is not limited to venture capital fund. Even individual, even corporate, they can also qualify. Not only, venture capital fund. So this is also wrong. What about D? Any individual investor with net worth of 50 lakh. This is again wrong. Net worth is not 50 lakh, rather it is 2 crore. Right. Plus, just having money is not enough. The person must have relevant experience like a startup investing, entrepreneur, senior management, etc. Right. So let's quickly summarize the key point which we have covered in this particular through this question. I told you we are talking to the context of angel investor. So remember, to the context of angel investor, as per the SEBI has defined angel investor as follow. SEBI definition. So individual with asset more than 2 crore, excluding house, he should have an experience in startup, multiple business, senior management role. Right. Just now I given you one example of CEO, have retired CEO. Now minimum investment is 25 lakh. This is a very important thing. How much is the minimum investment for this angel investor? 25 lakh. Okay. And second point, that if it is a corporate, if it is a buddy corporate, then net worth should be more than 10 crore. And AIF and VCF registered with SEBI, they can also be the angel investor. The purpose is to encourage early stage startup funding while ensuring that investors are financially strong and experienced. So friends, remember, angel investors are not rich people with a spare money. They are experienced individual. They are institution with financial strength. Right? I hope this concept is crystal clear now. Let's see the next question that we have. Friends, do hit the like button if you really think that it is adding value to your preparation. Now, the question is as per, I think this question is repeated. Let me skip this particular one. This one is a repeated one. Okay. Now, which of the following is not a common symptom of a sick industrial unit? Very good question. This question is asked every time. Sick start. But question pattern only change, but you should know what is the meaning of sick industrial unit. So not a common symptom is being asked. Right. Options are in front of your screen. As you can see, persistent shortage of cash to meet day-to-day obligation. Option B, continuous increase in sale and profit over the year. Option C, decline in capacity utilization and frequent breakdown in the plant machinery. Option D, delay or default in payment of a statutory due such as taxes and salary. So let's start with option A. It says that persistent short of cash. This is definitely a symptom of sickness. Suppose let me illustrate it here. Right, let me illustrate this particular point here. Very important from examination point of view. Suppose there is a company. Okay, and this company is always short of cash. This company, it is always short of cash and it cannot even pay for daily expense like electricity. It is unable to pay for, electricity, right? Or, raw material or, wages, right? It shows that business is in financial trouble. So imagine a factory that has to borrow money every week just to pay worker. That is clearly a red flag, isn't it? So this is the point. So persistent shortage of cash to meet day-to-day obligation. Yes, this one is condition. So option A is correct. Option number B says that continuous increase in sales and profit over the year. Yes, this is not the symptom. See, if the sales and profit are continuously increasing, the unit is actually healthy and growing. So this is not a sick one. So option number B is the correct answer to this particular question. Option C, decline in the capacity utilization and frequent breakdown in the plant and machinery. Yes, clearly this is a symptom. What is the meaning of this term capacity utilization? Let me explain. It means, how much of the factory full capacity is being used. Every factory has a particular capacity. So how much of that capacity is being used, that's called capacity utilization. So if the plant can produce 100 units, suppose there is a plant that can produce 100 units, but it's only producing 40 or 50. So because of frequent breakdown or inefficiency, so it's clearly a bad signal. For example, take the case of textile mill with machine always out of order and worker sitting idle. This clearly shows the sickness. Option D says that delays or default in payment of a statutory due such as tax and salary. Another symptom of sickness. Yes, this is also another symptom. Healthy unit pays salary, provident fund, taxes on time. If payment are delayed again and again, it means the company is struggling with the finance. Right. So what we have discussed here, we have discussed some symptoms of sickness. Option B is the correct one. Remember, these are the symptoms of sickness. Persistent shortage of working capital, decline in capacity utilization, and delay or non-payment of a statutory due, continuous losses, deteriorating financial ratio, irregularities in accounting. So these are the symptoms of sickness. Okay. So friends, remember, a sick unit shows sign of financial weakness like cash shortage, declining production, default, and if sales and profit are rising steadily, that is actually a sign of health. Now friends, let's look at this particular question. Very good question. It asks you which country is credited with the first implementing the concept of industrial cluster as an economic development strategy. Options are United States, India, United Kingdom and Italy. Very good question it is. Which country started the concept of industrial cluster? So now many of you think of the United States because of the Silicon Valley. Yes, Silicon Valley is the world famous technology cluster where thousands of IT company, startup, research institutions are concentrated in one place. But remember, Silicon Valley developed later in the 20th century, right? You know, the concept of cluster existed even before that. So while US is a successful example, it is not the first country to implement it. What about India? India is also industrial cluster. Like you might have heard of Surat. Surat is very famous for diamond, right? You might have heard for Tirupur. Have you heard the name of Tirupur? So Tirupur is famous for textile, right? Moradabad. You know Moradabad. You might have heard of Moradabad. So Moradabad is famous for what? It is famous for brass work, right? So friends, but India started this cluster development program much later, inspired by the international model like Italy. So India is not the pioneer. What about United Kingdom? Now the UK is called the birthplace of the Industrial Revolution. This is called the birthplace of the Industrial Revolution. Many industry grew here, but they were not formally organized as an industrial cluster. See, what we are talking about, we are talking about the cluster, industrial cluster. We are talking about this. So basically, they were not formally organized as industrial cluster with a development strategy. So while the UK was an early industry hub, it was not the first country to implement the cluster mechanism. The correct answer to this question is Italy. Yes, Italy is the correct one. Italy after World War II, the northern region of the Italy like Emilia and Tuscany become famous for a small and medium industry grouped together. For example, one district is specialized in textile, another district in ceramic, another in machinery. So this concentration of similar industry in one region created a strong network, and business could share supplier, skilled worker, knowledge. This was the real beginning of the modern cluster strategy. Later thinkers like Michael Porter, they studied this Italian cluster and made the concept famous worldwide. So the correct answer is Italy. Italy is credited with being the first to implement industrial cluster as a development strategy. Please remember this question are most frequently asked. The next question is a very good question. Let's understand. What was the key reason why the Jaipur MSME cluster did not perform as expected? Yes, Jaipur MSME cluster. Option A, lack of skilled labor and increase in production cost. Option B, a strong competition from international market. Option C, over investment on infrastructure without market demand. Option D, excessive government incentive causing dependency. So let's look at option number A. Yes, this is the correct answer. In Jaipur, many MSME struggled because they did not have enough skilled worker. This is the main point, lack of skilled worker. Right. For example, if you are making handicraft or jewelry, you need a skilled artisan who know the craft well. But here, the shortage of such skilled worker labor affected the quality as well as the efficiency. At the same time, production cost kept going up, like raw material, electricity, wages. The double problem: low skill and high cost, reduced competitiveness. In fact, many units were working with just 50% of their capacity. What about B? A strong competition from international market? Yes, international competition does affect many MSME, but in Jaipur case, the main problem was not global competition. The bigger issue was inside the cluster itself. Lack of skilled worker, high cost. So option B is not the primary reason. Yes, it was a reason, not the primary one. What about C? Over investment in infrastructure. So what is the meaning of this term over investment? It means building more than what is required. But Jaipur problem was not too much infrastructure. In fact, cluster has issues like poor marketing support, lack of design innovation, right? So this option does not fit the real cause. What about D? Excessive government incentive causing dependency. Sometimes too many subsidies can make industry dependent. But here Jaipur MSME were not suffering because of too much incentive. Instead, they were struggling due to skill shortage, weak design development, rising cost, etc. So let me summarize the keyword, right? The main reason Jaipur cluster underperformed was the skilled worker. Lack of skilled worker, right? Plus production cost was rising. Right. So these are the two reasons. So friends, remember the Jaipur MSME cluster teaches us that even with demand, if you don't have a skilled manpower and cost efficiency, performance will suffer. I hope this breakdown make things easy to understand. Now friends, let's look at the next question. Very good question again related to the cluster. So you can see now back to back 3 questions on cluster. So you can see the importance of cluster development. Very important cluster development program. The question is, which of the following correctly describe the typical phases involved in cluster development? Option A, identification, initiation, establishment, operationalization, transformation. Option B, planning, marketing, executing, closure, post evaluation. Option C, formation, production, marketing, distribution, termination. Option D, idea generation, innovation, product launch, growth, decline. So this one is a typical question. Very good question it is. So friends, let's go through each and every option. We will start with option number A. Yes, option number A is the correct one. Right. First thing is the identification. Right. The very first step in cluster development, we are talking about CDP. That means cluster development is called identification. Now let me clear your theory portion. What is the meaning of this term identification? Do you know its meaning? Let me write it down. Identification. You know, find the potential cluster. We find the potential cluster. How do we find it? By mapping the industries. We map the industry and find the potential cluster that share similar product, similar process, similar market. Let me give you one example. Like, you know, identifying a particular region where many small textile unit exist. Many small textile unit exist. Right. That is called identification. After identification, we have initiation. Initiation means what? You know, formulate a strategy, engage a stakeholder, create a shared vision for the cluster. That is called initiation. Like organizing meeting. Suppose you are organizing meeting with the local entrepreneur, right? You are organizing meeting with the local entrepreneur. Why so? So as to agree on a common goal. After initiation, then come establishment. Set up governance structure, common facility, begin development planning like training, technology upgradation, infrastructure. So in this case, we create a common facility. What we do? We create a common facility center for dyeing and finishing in the textile cluster. After establishing come, you know, operationalization, which means, you know, making the cluster functional with active participation, marketing, skill building, and innovative support. Like, you know, launching cluster wide branding. One example you can think of launching cluster wide branding. Okay, this is called operationalization. Then comes, you know, transformation. What is the meaning of transformation? You know, focus on long-term sustainability, scaling up, continuous innovation, networking beyond the local region. So that's why, you know, from this discussion, what we come to know that yes, option A is the correct one. Option B is wrong. Why it is wrong? Because, you know, cluster development is a long-term strategic process, right? Not just a one-time process with closure. It is a long-term strategic process. Option number C is also incorrect. This look more like a product life cycle or business operation model. Cluster are, you know, building ecosystem, collaboration, growth. They do not terminate like a product. And option number D also look like, you know, product life cycle. You can look at it, right? Again, you know, cluster development is much broader. So friends, remember there are 5 phases of cluster development. First of all, identify, then initiate. Means identify means you find the potential cluster. Initiate means you build a strategy, you build shared vision. Establish means you set up a structure, set up common facility, set up a start development. Operationalization means, you know, functional cluster with active participation. And transformation means long-term sustainability, scaling, innovation, and networking. So remember, cluster development is like, you know, nurturing a community of business step by step, from identifying the potential to sustaining the growth. I hope you find this explanation easy to understand. Do hit the like button. Now friends, let's see the next question that we have. The next question is on your screen. Which of the following is not a scheme or program offered by CAIIB for MSME? Option A, SMILE, CAIIB Make in India or Soft Loan Fund for Micro Small Industry. Option B, CAIIB Assistant and Aid for Thematic Support to MSME. In short, we call it SAT. Option C, PM Sonidhi Scheme for Street Vendor. Option D, CAIIB Speed Plus Scheme for Financing Purchase of Machinery. If you look at the option number A, yes, it is correct. You know, this SMILE scheme provides soft loan. What is the meaning of this soft loan? You know, for new or early stage manufacturing. And you know, it offers you flexible terms, make it easier for a startup to access fund. Like for example, a new small textile unit want to start production, but they don't have enough capital. So SMILE provide a soft loan to help them. Then we have SAT. Yes, this is another correct CAIIB scheme. You know, SAT focus on SC/ST entrepreneur. It's all about SC/ST entrepreneur. It provide term loan and favorable terms and credit guarantee to help promote inclusivity in MSME. So for example, suppose there is an SC owned handicraft business, they can get financial support to expand operation or upgradation. PM Swanidhi scheme is the incorrect one. This is the government program for street vendor, right? It is launched by the MOHUA, Ministry of House and Urban Affairs. So SIDBI, it provides working capital loan to street vendor. SIDBI may sometime act like a facilitator. Remember, this particular SIDBI, it may act like a facilitator, right? But the scheme is not directly offered by SIDBI, right? What about option D, Speed Plus? Yes, SIDBI Speed Plus scheme is the correct one. Speed Plus help MSME purchase machinery, right? So this scheme, they can purchase machinery from the OEM. OEM is what? Original equipment manufacturer. Please understand, sometimes next time the question will be asked regarding the Speed Plus scheme. You must know, Speed Plus scheme help the MSME to purchase machinery. It help the MSME to purchase machinery from OEM. It offers streamlined documentation and competitive interest rate. So the correct answer is option number C. Please remember, SMILE is a soft loan for early stage MSME. SAAT is a support to STSC enterprise, and Speed Plus is a machinery financing for MSME. Swanidhi scheme, it's loan for a street vendor under MOHUA. So friends, the takeaway is that SIDBI has a specialized scheme for MSME, while PM Swanidhi target a street vendor and is government initiative. Friends, let's